Hey guys, welcome back. Good morning, January 24th. Let me get set up here. We're going to be streaming all day, trading options, stocks, and futures. My settings are going. Yeah. Okay, we've got about 10 minutes to open. Up true. I'm not sure, man. It honestly just seems like it's just choppy, waiting on earnings a bit. Broke out of that resistance, so I could see it moving up, but now it's down 0.5% in pre-market. So, but it is testing that support from yesterday. See if it holds that. That's kind of a big level for this breakout, right around that 400. Yeah, that's probably, I mean, Microsoft earnings, does that come out yet? I think that comes out today. Maybe after hours. But yeah, I went long yesterday on that break, so. Yeah. That was after I was short, so. Kind of getting whipsawed a little bit. Gotta just stick with direction. I think it's maybe doing kind of a cup and handle here. BBBY with that nice gap up. Good morning, Beta. What's up, Ace? What do I think? It sounds like you already know if you already claim it's a wave C. Move up on everything right now. Did earnings just come out actually? No, just kind of a move up. I don't know. So it looks like we're getting some of our T+2 today. Hopefully it's not just only in pre-market. But it is definitely a good sign to start. GNS is ending up down a little bit. HLBZ had a big run up, somewhat big last night, but now it's settling back down. Down a bit. Oh, what's our pre-market stuff? SBIG, top of the board on pre-market gainers. Not anything I recognize on there for pre-market. IPDN, new 52-week high. That one's familiar. Biotechs have been going crazy. Wow, look at that thing. Nothing like a little reverse split to cause your stock to rally. When's Bird's gonna reverse split? Back up to a quarter. Hard to tell on that chart. GME, I think I might be doing some day trades on it today. With the options. Could be the start of a big move today. Morning, John Parker. Got about 5 minutes, let's see. A lot of weight is being put on China reopening for good reason. Fly coming back down at support. What happens? Yeah, BBBY was up, what, 19% it hit? Computers. Almost every commodity are at critical levels of inventory. Credit Suisse Chairman Lehman. Funny. I see no global recession. Ford in talks to sell car plant in Germany to China's BYD. That data's coming out today. So here's the economic data today. We got Redbook, manufacturing PMI 945, services PMI, Richmond manufacturing index. So the first hour or so, we could see some movement from this stuff. Bond auctions. That's it. Morning, Skrills. Thanks for joining, guys. Appreciate it. Thank you for your likes. We've got 9 of them. Well done. Thank you. Is kind of breaking that pre-market VWAP. So BBY, let's see. I guess today I would like to see it back holding the support from back here. Just 33.50. Of course, a big move up would be nice back into the 4s, but at the least holding the support that we had from the bull flag. $10? Where the heck? 11? Oh, okay, 11. I thought we were at 19. Oh, those viewers. Yeah, you guys. Thanks, guys. Appreciate it. Party City with a little bankruptcy gap up. Market's about to open. We've got 1 minute. 1 minute remains. Okay. I gotta focus. What am I gonna do today? Cover calls and BBY. Maybe scalp some during the day. GME might be wanting to go heavy on some options. I think I'm fully into GME though, so probably not do covered calls in it today. All right, market's open. I'd like SPY to hold this level. It's kind of opening up. Oh, yeah, flush. It's kind of opening up at the low I was saying, but yeah. Look like unextended. Yeah. It's slow. Yeah, everything's just lagging, getting started. Getting opened up. BBBY pushing up to the pre-market. All calls I said yesterday was spicy. Nice. A nice little gap up. I don't know. It seems like the market's taking a while to turn on here. AT&T says it's halted. NCLH says it's halted. MO says it's halted. Getting some glitches this morning. I've got SMG, Walmart, Lilly, Eli and Company, Neo, Verizon, MO, NCLH, T. They all say they're halted. I don't know if it's just a lagging market or what. I think it's just sometimes the market takes a while to get going. And if they do, then it'll sometimes show as a halt, but it's not actually halted. That was weird. Everything's just waking up. Prime halt. Yeah, it's just, I think the morning, they call it halted, but they were just taking a little while to wake up. It's not an actual halt. Some, it's banned in some places, and it's actually banned in China for children, the normal TikTok. Yeah, is up. Yeah, SMG's halted. Yeah, there's a few names that are still kind of lagging into the open. It doesn't like the big OPEX on Friday, now T+2. It's a lot to take care of. GME bouncing off that 21. Buy with a pretty big wick there. HLBZ back green. GNS is flushing through support. BBBY not halted. Hit a new high. That is neat. I want to kind of keep an eye on GME today, see the volume and what's going on, because I'll probably be trading this more. BBBY, it looks like it's strong. Already broken pre-market high. The market's below that level. Unless yesterday was a false break to the upside. Hmm. I might flip my MES longs to shorts if it looks like it's going to hold below this support. And I think we'll probably move down to this 397. Still early though. Spy puts in and out. There you go. Little scalpy. Can't watch skeletons? Like in general, or the comedy bit? Really? That's funny. Chinese EV stocks? I'm not sure. Maybe they're hacking our market because we've been very glitchy this so far. Well done, Ace. Oh, all right. Spy broke that low. I wonder if that's affecting the market, just this glitchy opening. It's causing people to sell. Could be. I feel like that's probably what this red and this volatility this morning is from. Once everything resumes, I wonder if we'd rip. Watch Neo. Oh yeah, Last of Us. I want to check it out maybe. The game is pretty cool. I don't know if I like a scary show though. Fed officials are preparing to slow interest rate increases for the second straight meeting. Yeah, you're getting some news about all these halts. I think that's just a It's kind of like just a default tag it gets put on with it not trading, but I think it was just slow and stuff was going on. Wasn't halted from volatility necessarily. Just hadn't opened with the market. BBBY is strong. Mm-hmm. Gap up. Gap and go. So it feels like it's been a long time since we've seen actual expectations from an OPEX. It just feels like the first time in a while where it's like, okay, Tuesday after the Friday, a lot of options in the money. We should rally. Just feels like it's been a while, but finally, I think that's what we're seeing on BBBY. Hesitant to say, oh yeah, T+2 for sure, but GME just flat, low volume and open. Yeah. Yeah, that's like PUBG, their blood is green, right? So they can't have red blood. GME just dead at open. Yeah, Neo was one of the ones that got a weird halt thing. Walking Dead. Yeah, I didn't watch that one either. I think since I played the game, I might enjoy it, but I don't know. BBY. Let's see. 12 million in the first 5 minutes. So yeah, huge volume in that first 5 minutes. Yesterday was 2 million. 4.5 million in the next 5 minutes. Yeah, so our volume's legit on BBBY. GME's is off. Looks like the market's starting to wake back up. All that weird stuff this morning could have been part of this sell-off. GME does look like it has a nice little cup and handle going on here. I might start jumping into calls actually. Usually I don't do it at the open, but it's so mellow right now that I probably will. Start scaling into. So if I'm like saying 40 by Feb 3rd, that's a pretty aggressive price target in that amount of time. So I'm not going to move this scale. 24.40 debit spread or 23.5 calls. I just run with those 23.5s or even 22s. Next Friday, yeah, that's pretty close. Oh, and there it starts to go. Let's see if I can get a fill here. Now I'm chasing it. Fun. Fun job, market maker. You literally just upped it 5 cents from when I... Alright, canceling that order. I'm doing killer fills now. Or hidden. Let's see, so where is it? Special handling. Wait, automation. There's a way to like hide it. Oh, that's with TD. I don't know how to do that on E-Trade. I'm gonna do killer fill. Immediate or cancel. Fill or kill, immediate or cancel, fill or kill. Try this. Boom. It was a kill. Do immediate or cancel. What's the difference between immediate or cancel or fill or kill? Alright, I'm gonna jump. I gotta get into some of these. Gotta do it. I don't have any exposure from yesterday. Market's got some big candles in there. Alright, I got partial fill. Come on. Data I think just came out. 9:45. We're supposed to get something. Yeah, PMI, manufacturing PMI, and services PMI. So we're seeing the market react to that right now. GME is also moving up from it. Just getting pushed. GME Feb 3, 22 calls. BBBY. Oh, that's a 1 minute. I'm like, what's happening? Nice little consolidation up here. Is that the... Yeah, that's good. Looks good. A lot of volume on BBBY this morning. Why don't I only get a partial fill? You gave me one? Market maker, good. Okay. Yeah, there's some glitching or something going on this morning. A lot of stuff like just didn't wake up with the market, so it was getting a halt tag on it. It wasn't necessarily halted from volatility. It just was halted because it wasn't trading yet. And I think that was part of the scare this morning, kind of why the SPY might have been dumping a bit. It's like SPY's rallying now. I think it just started to get scared with whatever was going on. Grom, we talked about Grom. BB announced big news this morning. What was it? Didn't seem to care. Yes, Grom. SPY's ripping now. I'm thinking about going in, averaging into my longs. Not sure where I'd want to do that. Didn't have too much conviction with that gap down. I don't know what's going on with Grom. Just leave my size. I think I have 4 of them. All right, still not filling me. Stupid. I gotta wait for a red candle. It'll get me filled. SPY just ripped. BIAF of 40% almost. Little red candle get me filled. All right, GME is starting to move up with SPY. No volume yet on it, but we are T+2 from OPEX, and we are due for our rally to 35, 40, maybe 35, maybe 30. If it happens by next Friday, that would be pretty quick, but not out of the ordinary. That could happen in like 2 days. Okay, and I'm still chasing. Don't make me do this. Already buying in the morning, like at least give me a fill. Being polite about it. Yeah, those contracts are up 10% already. The one that filled me, I'm like, oh yeah. Thank you guys, appreciate your likes, 14 of them. Hope a little rejection here on GME so it'll fill my calls instead of just fat green candles. Come on. Chill out. All right, it broke. GME might be about to go crazy today. Yeah, it's looking pretty gnarly. If you got gnarly boots, put them on, because it's about to get extreme. Still chasing this freaking contracts. There's a red candle. All right, now I should be getting filled. Nope. These contracts are up 16%. Come on, little red candle. Get it. Do it. Do it. Do it. Do it. Okay. Market order. Got it filled. Stupid. I'll average into it once they come down in value. I got 7 of them so far. But so far it looks like getting options in the morning is going to be a good decision. Just because we're expecting a move today and it was so subdued this morning, low volume and just basically shut off. So I thought this is probably the best time because we're probably gonna get a big dip before a huge rip. So, you know, sometimes you gotta go in the morning. All right, GME's up almost 2%, but so far I'm liking what it's looking like. BBBY, if it holds above that 3350, that would be good. DA, volume settling down it, but still elevated on BBBY. GME, the fact that this volume is staying up here as we progress through the day is bullish. That was like yesterday when it was increasing. Not sure we're going to get increasing yet. I mean, at some point, if we get a proper move, it should increase, but so far it's low, but maintaining. But it's still early. Still early. So more data at 10. So we have 8 minutes. So we're going to get manufacturing. See if that has a move. Market looks like it decided to keep going. Up, up, up. Glad I didn't flip, man. I almost thought about flipping down here, and I was like, I need to have patience. And then seeing how the whole market was kind of halting and doing weird stuff, I thought that could be part of the reason for the drop down. Oh, there's a red candle. Okay, now I can get some more calls. Bigger volume there too, which I'm fine with. Hola, Donro. Thank you, David. Alba is 11%, huh? Nice. Moving back up to pre-market. SPY's squeezing. How many contracts do I have? I got 3. Leave those MES contracts for now. I have an order for more 22s. I'm just trading the futures on SPY. So not options. Look at that rip. So my cost basis on it is up here for the contracts. Where was it? Here. So basically pre-market high, unfortunately. But I think this could continue. Breaking that 400 yesterday is pretty bullish to me. See it move up to 408. And see what happens up there. And with that would be help support a GME move too. So it's looking good. Linux was concerned with the VIX. I don't hold a ton of weight on trying to read the market with the VIX, but we'll see. He could still be right. The SPY is rejecting right where that line is drawn. Okay, I got filled in more GME contracts. Going a little early, a little aggressive. But that does look like a nice cup and handle, and the move is expected. Increasing volume yesterday was good. Today, so not quite finished with that first 30 minutes. But yeah, I have more volume today already, so that is good. Yesterday it increased, so I would like to see that continue by rejecting that level. But yeah, so far more volume this morning, just a bit. That's a pretty big red candle. Volatility this morning. BBBY. Yeah, HLBZ was looking pretty good. Moving back up to its pre-market highs. GNS does look good too, 10%. Wow. It was red at open. That's a big candle on GM or SPY. I guess it's maybe preparing for this data coming out in 3 minutes. It's just getting cold feet. I don't know. Or GNS and HLBZ and these short attackers are breaking the market. Wow, dude. HLBZ is 23% already. Holy crap, look at that candle. Yeah, GME getting flushed on that SPY candle. Same with BBBY. Bear trap, maybe. I mean, a lot of the charts looked weird, are going to look weird because everything was kind of like halted this morning and getting really weird stuff. So, not a glitch. I mean, call it whatever you want to call it. It wasn't normal. It wasn't how it's supposed to run. I feel like we've seen it with different stocks that are just thinly traded, where it just doesn't open and start trading with the market. And then it'll call it a halt. I mean, I know I've seen that on Webull, like where it opens halted, but it's not actually halted. It's just kind of slow out of the gates. Yeah, GNS moving back up, retesting that high. This thing has held up really well. You've got that cup and handle. BBBY and GME definitely need to break free from this SPY. It's Can't keep a good man down. HLBZ, new high, broke pre-market. Wow, that's a massive candle on SPY. What the heck? Look at this volatility. Or if this still has to do with what happened this morning. Holy crap, HLBZ. Happening here? Dude, this candle on SPY. What? Maybe my short was a good play. I just held through. I don't know. I mean, dang, GME just shut down with SPY. Hopefully all of the BBBY obligations weren't just met in pre-market and right here. All right, data came in. See if we rip from it or dump. I don't like this. Manufacturing came down. Market is freaking volatile this morning. Look at this. Yeah, it could have been what this red candle's from. I don't know. But the market might take that as bullish. Bad manufacturing. This is the risk with buying options early in the morning. Down 23%. Blech. Right. Yeah. I mean, the last couple data sets we've gotten though, recessionary and bad data has actually caused the market to kind of sell off. It hasn't been bad data means good market lately. You know, at some point the market's going to start pricing in a recession. So HLBZ and GNS don't really care. GME, that is a lot of volume, which is good. It's red, but that means it can turn around to me and rally. Yeah, it's been 440,000 yesterday, 447. Today we have 573, so a little bit better volume. Yeah, sometimes DCA by mid-morning, but sometimes we just see a rally out of the gate. But then yeah, midday you're gonna lose a lot to theta. Yeah, HLBZ broke pre-market high, but it's kind of wicking up here now. But this is a new high on it, so at least for this rally. So now the market's just chilling. I don't like that it's chilling at this low though. This is not very bullish looking. Now, if I'm bearish on SPY, GME not going to make its move. Hmm. Yeah, HLBZ going to retest. Maybe push through that resistance. Oh, it's not good. SPY's flushing. Yeah, I flipped. I didn't like it. I closed my longs, took a loss, went short. Yeah, I'm wondering if yesterday was a bit of a false breakout on that 400. I mean, this was just a ridiculous move. I was short here, and then it just made this huge OPEX rally. So do have a bit of a RSI divergence here too. And then on the daily, it's could be making one, which I noticed yesterday. So depending on where today ends, will be a bit of a RSI divergence, which would be bearish. We'll get the direction right one time. I mean, I had it right. I just that big this ridiculous move didn't make sense. So now catch me out with GME. Dang it. Clicked it on this. HLBZ keeps rejecting that 55.40. GNS is moving up. Broke pre-market high also. These things are trading pretty similar now. Let's see. Volume was better yesterday. Maybe this is a fake out to the downside. Just based on GME. The big bottom wick there. I can't broadcast my futures trades. I don't think it helps me. I like this bottom wick though, if you're a bull. But and of course I want the SPY to rally for GME to do it, but natural gas is moving up. Yeah, penny stocks are definitely riskier. It's probably good you missed whatever run on a penny stock. 8.4 to 1. Sentiment is strong with this one. Well, I didn't close any of the GME. I mean, sometimes it's better to start trading at like 11. Just let all the morning volatility shake out. This big red candle, no explanation on that. BBBY holding that 33.50. That is neat. Thank you guys. 23 thumbs up. Appreciate it. What? They're saying so there was a lot of selling this morning. They're saying that was legit. What? Possible pattern? What is this overlaid on? Oh, blue line BBY. Uh, yeah, I don't quite get that chart. Technical issues? Yeah, I don't know. Yeah, 81 stocks were halted for limit up, limit down, despite not hitting the band's thresholds. Yeah, that was strange. Technical issues. BBBY, come on. Market's now rallying. For GME, spiked, BBY followed. GME came down. So what is it? What are you saying here? Big rip. GME spiked, BBY followed. Has GME had its spike yet? Yeah, I don't know if they're still correlated. Maybe. They've been detached the last however long. Now HLBZ is selling off. It does kind of have an inverse beta going on today. It looks like. Maybe it was these stocks that are breaking the market. These tiny small caps. I know over the past year there's still correlation. I think it ebbs and flows though. The correlation that we see. Sometimes they're tight and tight, other times they can kind of move freely. Seems like that way for SPY also even. I don't know who you're talking about, Access. And Explode. Raise an eyebrow because he's wrong, because that's not exploding. Nighthawk, you're doing all these, what, like synthetic longs? Shorting puts and long calls? That is neat. Look at this wick on SPY. The volatility this morning is like in a range, but just crazy. BBBY. Don't give it up. Don't do it. Posting your Discord a week ago. Someone else posted it. Oh, you're saying stocks exploding and then all these halts this morning? Hmm. I mean the market fixed itself. It's not like it continued. The doomsday clock has moved to 90 seconds before midnight. The closest it has ever been. candles are massive. Yeah, there were like 80 something. I know like half my watch list was, not half, but a lot of it was halted. Polo. Oh, big pre-market move. Yikes. Thank you guys. 26 likes. Appreciate it. GME. Excuse me. Dare I do some covered calls on BBBY? Probably not. Maybe. Oh yeah, I can't day trade it, so no, I'm not going to. Hope is holding up pretty good around VWAP there. We're watching IRNT. That was a nice looking chart too. Same sort of deal. BBBY is kind of flushing through these supports. Hold this level from back here. Like there. Or around that range. Come on. What's this one from? I don't even know. Bank of America CEO says loan demand has slowed as a result of recession fears. Just hanging out here right at VWAP. Hmm. Price target for HLBZ? I mean, it did break the high. I mean, next move up. It kind of hit the resistance already that I had drawn there. It breaks that. 66 cents. It's looking nice. It's holding. I mean, it's holding up. It's consolidating above VWAP with a new high. So probably will make a new high today. Oh. Borrowdesk only shows 300,000 shares now. Yesterday there was over 1 million. Borrow fee is down slightly. Good to see some volatility in the borrows though. I think. Volume this morning on GME. Turning out to be pretty average. Well, it's still more than yesterday, this first hour. And yesterday was better than the day before. But see how it's increasing. Okay, at 10:30, see if the market starts to move. A little bit. Got now an hour to EU close. GME doesn't get to move up. Short puts would have been the play. This is looking more and more like a cup and handle, though. Actually, SPY also. So this divergence will be erased if SPY rips up today and pulls this RSI up. Maybe this is the floor for BBY? No. 31.90. Or just that $3. Holding that $3 would be good. What the options have done. A lot of volume. Yeah, that 3 level is still quite a bit of open interest. 16,000. We could start to build a gamma ramp again. A lot of weeklies though. Yeah, all the data's out now. We just have bond auctions at 11:30 and 1. So market is free. Have EU still for another hour. So my long natural gas contracts were up last night. I thought about closing them, but I put in a stop limit so I wouldn't take losses anyways. But it gapped down, they stopped out. This thing's directionless. Brian Jeffers. Noise. Gap. Yeah, I know there's gaps down there. 130. We can leave those alone. Yeah. Moving on up. 57%. I've got these warrants still. Why isn't this moving? Why doesn't the warrant move anymore? Buy's coming back down here to VWAP. Oh, GME. XMD is making a move up. Gonna be a rally Monday, sell off Tuesday. Yeah. All in SPY. Not gonna work. Not gonna work for a big rally. Needs to break free. This morning I was getting hyped. Too hyped. Elon Musk is one of the greatest entrepreneurs of the last 100 years, says Morgan Stanley CEO. Dollar Tree? Dude, BIAF, 80% now. 83%. Why don't these warrants move? Good clinical trials of a respiratory research. I sold these shares, but I made money on them this IPO day. But the warrants, I thought those would move. Might as well sell it. SPY below VWAP. Alright, I sold those warrants. SPY and GME both look like they have a bit of a cup and handle. But since this side's higher, it could end up being a divergence on the RSI and how today closes. Not a very dramatic one, but see if GME has that divergence. Yeah, GME has the same one, dang it. Unbelievable. GME is actually more pronounced. after a settlement with an activist investor. %. BBBY, yeah, it did bounce off that level, so moving back up to VWAP. ECB should continue with half-point rate hikes, Simcus says. Yay, a direction is being decided, maybe. Up. Up. Nice. BBY getting action. Whew. The relief, man. Mark was sketch this morning. Starting with those halts. Simcus says reaching ECB rate peak before summer may be unlikely. Core inflation still strong, shows fight not over. Wage growth set to beat historical averages. Okay. Dollar Tree has 102% ownership institutionally. That's pretty impressive. Rejection was at the daily 50. Let's give it a little looky look. I mean, it broke through it on that wick. Yeah, it'd be a nice little crossover. Today isn't quite bullish, then yeah, we're gonna get divergences in both SPY and GME. So today's kind of make it or break it. It looks like. I guess we have seen OPEX rally start on Wednesday, maybe Wednesday morning. interesting now. It looks like BBY is pushing up with the market, so both of them are kind of moving with the market at this point. Just need them to outpace the upside heavily. How to miss that penny stock run? Yep, they're sketchy. You can thank your brokerage. The IAF 84%, IRNT 21%. Hey, puppy. Puppy. Now when should I average in? Yikes. I mean, yeah, 5 minutes ago, but I didn't have much conviction then. Liking it. Up and handle maybe playing out. Little bull flag on the side of the cup. If the volume starts to pick up a bit. But it needs to be a big day. If it's not a big day, it could be in this area. BBBY, higher percentage than HLBZ. Market hasn't really broken out yet, but signs point to up. Yeah, Phil. If GME makes a big move today, it would have been a long time since we called the day, since a lot of people, because it just doesn't seem like it's happened in a while. Proper Tuesday after OPEX run. There's been so many excuses for it not happening. Oh, well, it's Martin Luther King Day, or it's Christmas, or oh, the swaps, or JH shared this tweet. Maybe an explanation for all the stuff going on this morning. Tons of issues halted today at 9:30. Looks like an algo on Edge X exchange went a little whack and took the NBB national best bid offer with it. Haven't seen kind of wackiness since Flashgrass of 2010. Here's what it looked like on the issue, on one issue, and McDonald's. The others that were halted all look pretty much the same. Yep. Sava likes to run when GME runs. Whoa, 23%. The news on this. Mid-stage data for Alzheimer's candidate. This is just sell the news type going on. Doesn't look like bad news. I guess the mid-stage data was bad. Yeah, your support's 2650, so you're about there. I mean, you're pretty much there at 27. Look for a bounce, basically where it's at. Breaks there, though. Got 24.5. Then probably gap fill. But it's not broken through that support yet, so maybe aight. GME, and don't do this. BBBY did not want to break VWAP. SPY didn't want to break new high either. I just rejected that top there. Here we go. Germany's cartel office? Germany's cartel office regulator has initiated proceedings against payment company PayPal Europe over the possibility that it hindered competition. SPY's breaking that resistance and filling its gap. GME going the opposite direction. Buy, gap fill, new high on the day. Let's rip, rally today. US to launch and test nuclear-powered spacecraft engine by 2027 as part of Mars exploration effort. SPY gap almost filled. You guys are getting wild on Discord. 631 top. You're buying 100. 8 strike BBY calls for next Friday. Wow. You know, February 3rd is next Friday. Sorry guys, I need to eat Malyani. BIAF 115%. Ironet at 28%. BBBY below VWAP. SPY gap almost filled. Win volume. Once we start seeing it move up, that's when the volume comes. I don't know when volume. Volume this morning is not too bad though. It's about like yesterday, which was better. You know, yesterday's volume was better than we've had at the beginning of the month, the 11th. So, and the fact that it was increasing was good. Today's, we haven't seen it increasing like we did yesterday yet, but it could wake up at any moment, and then it will increase, just like the SPY here just started ripping. Should get some pressure. I should maybe get more contracts. Eh. I filled the gap. New high on the day. Tested right at that resistance from pre-market. And next leg up. Probably put it up here. 401.84. And then 402.64. And then 408. Maybe. If we're not just range bound today and trade back and forth here. BBY looking strong. Thank you guys for your likes. 28, appreciate it. 28 is great. %10% on BIAF. Oh. Well, it's looking good. Looking like we might not get a divergence after all. Need a little bit more price action, really a retest of that high of yesterday, and this will not be a divergence. Or us closing up there at least. So I might rip past it and then settle back down somewhere, maybe on this support. In good time. See, it was a bear trap. That's my golf clap.
$2.76 a share. Now, homes closed 6% year over year to 17,000 homes. The company's cancellation rate for the quarter was also about 27%. This was nearly double the figure they reported a year ago, but through the end of December, D.R. Horton had about 43,000 homes in inventory, of which 28,000 were unsold. Their backlog, though, was down 46% to end 2022. And the company did also declare a quarterly cash dividend of 25 cents per common share and repurchased 1.4 million shares of common stock for around $120 million in the quarter. Now, the chairman of the company said in the beginning of June of 2022 and continuing through today, they have seen a moderation in housing demand caused by the significant increases in mortgage rates as well as the overall
Is that a limited time deal?
They noted that while these pressures may persist for some time, the supply of both new and existing homes at affordable price points does remain limited, but demographics supporting housing demand does remain favorable. So somewhat of a mixed picture. However, shares reacting favorably today, up just over 1.5%, and we're seeing strength, as you can see there, across all of the major home builder players.
Understood. And so we are seeing all of these names higher, despite the fact that they held off on that market guidance, some uncertainty there. And so it's interesting. The markets are still doing well with that. How about to the downside? 3M, new 52-week lows.
Right. 3M not having a completely different day today and dragging on the Dow as we're seeing industrial sort of falter here. And again, another mixed picture from this company, but one that signaled there is continued weakness really in industrials as well as consumer electronics. 3M did report worse than expected adjusted earnings in the fourth quarter on declining sales on a year-over-year basis, although top line did exceed what the street had been forecasting. They also issued 2023 adjusted earnings guidance below estimates and expect sales to drop 2 to 6%.
That sounds like a very exclusive offer.
Due in part to an unfavorable Forex impact between 1 and 2%. Along with this outlook, 3M is facing lawsuits over potentially faulty earplugs that were sold to the military and facing cleanup and legal liability fees from chemicals made by the company that potentially tainted water supply. So that's pretty negative in its own. But the chairman and CEO said in their earnings release the company will cut about 2,500 manufacturing jobs, which he said was necessary to align with adjusted production volumes. This really signals weakness outside of big tech. We've heard so many of these mega cap names reducing their workforce, cutting jobs, trimming, becoming more cost efficient. This is an industrial now echoing the same sentiment, showing that really the bleeding is not tech specific. It is pretty much affecting all areas of the market here.
Yeah. All right. Thank you for that. Jenny Horn, a busy week for earnings and a good look at a couple of the big names on the move. Jenny Horn, markets correspondent. Thank you very much. Let's get some insights on the news shaping the markets. For that, we welcome in Rob Fleming, senior market analyst with the Schwab Center for Financial Research. Thanks for being with us. So what are you thinking here about what we've heard in the earnings so far?
Well, good morning, Nicole. Thanks for having me on. Yeah, kind of a mixed bag we're seeing, and we'll throughout the week we'll get more insight as we have a broader swath of companies reporting. But yeah, kind of a mixed bag on, industrial companies. I think manufacturing is going to be one of the sore spots that we'll see during the season there, as we've seen from regional manufacturing reports, ISM manufacturing. We got some preliminary January data today, and pretty much all of the manufacturing components of Australia, Japan, Eurozone, UK, even here in the US.
I think he actually just has kind of a stutter.
So I think there might be some.
I don't think he's confused. I think
some lowered expectations there, but it'll be interesting to see how this earnings season plays out, and that's going to be a key driver of market action, I think, going forward.
As many of the numbers have been taken down, I mean, there were some lowered expectations.
You're so insensitive.
However, there's still this feeling that the earnings outlook is still too rosy. Is that a possibility?
Yeah, absolutely. I think that'll be something to keep a close eye on, to see what the kind of revisions we get to estimates moving forward, and that'll be key on how the market reacts. We've seen a pretty good start to the year, but this earnings season and then also next week's Fed decision is also going to play a key role in how we continue on in this early parts of 2023.
Right, understood. What are you thinking about the Fed? I mean, most people are thinking 25 basis points on February 1st. What about March? Another 25 basis points? I mean, where do you think the Fed's head is at?
Yeah, I think we'll definitely see another deceleration in terms of the magnitude of rate hikes. But I believe that they're still, with inflation where it's at, still pretty elevated. And given some of the rhetoric we've heard or commentary we've heard, still suggests that, they're going to continue to.
Dang it, man. How did GME not get a rip from this
to try to
this new high on SPY, right? The charts were perfectly copying, had the high,
the disconnect
came down,
the bond
had the high,
markets,
came down,
the
and then it came up and
markets,
tested the high.
where the Fed
GME
is
didn't,
saying
and
they're
it broke the
gonna
high.
have their terminal rate or stop and pause there.
It's
So
crime.
that'll be an interesting dynamic to see how that plays out.
Understood. So at this point now, we're waiting on a slew of economic data later in the week. We're going to get GDP, we're going to get durable goods, some home sales numbers, and the final on sentiment. Tell me a little bit about each of these.
Yeah, the one preliminary durable goods orders, that'll be a December read. That'll be something to pay a close attention to, because that'll give you a gauge of.
SDC is moving up on my list.
Big ticket items expected to last 3 years or more.
Looked at this one the other
usually
day.
carry a higher price tag. So if we see spending there continue to maintain, then that's a good sign for how healthy
Avia
the
too.
consumer is. One of the other
All these
reports,
similar
I
charts.
think that personal
This
income
one's
and
not as good.
spending is going to be very interesting to see.
I like this
just,
chart, SDC.
And that's the Fed's, it'll include the Fed's favored gauge of inflation, which is the PCE price index. So I'll be looking at those reports pretty close. We will get the
Definitely need to
first
break this
look
pre-market
of
high.
fourth quarter GDP. I know it's a backward-looking report.
Maybe that
but,
break of that and
be
GME will make its
interested to
move.
see the contributors to
A bagel.
what
Yeah,
the
I just had some
economy
food.
does. It's expected to slow a little bit, but still maintain expansion.
Right, understood. Rob Fleming, great to see you. Thank you so much, Senior Market Analyst at the Schwab Center for Financial Research. Thanks, Rob. Plenty more to come right here on Trading 360, our 360 Spotlight looking at Defiance's ETFs, 5G Fund, FIVG. You're going to want to hear more about that. Our disruptor today, Toast, a down.
SEC staff is reviewing trading activity at New York Stock Exchange Open. Great. That was like 2 hours ago. SEC is in touch with relevant exchanges on today's trading. Larry Summers has said that while there's been some good news on the economy lately, the U.S. is still most likely headed for a recession this year. Walmart will begin investing in higher wages for associates. BBBY testing that support. Oh man, just not a lot of strength. Okay, consolidation up here could be good after gap up. Bad. My cash secured puts on Bed Bath are up 5% today. Retail's fault. OTRK. Retail did it. Oh yeah, look at that nice bull flag. AI powered telehealth? Sounds sketchy. Very sketchy. Let's buy it. CC investing the settlement of $90 2028. Oh, I see. Investigate equals settlement. Okay, yeah. 2028. That's true. Immutable game. Animera? No, I haven't. Animera. I saw some new games. Let's see. This one's gonna be on consoles? How does that work? OTRKs? Really? Spy's kind of rejecting that. Breakout. That's their news? I didn't know there was a third. They had earnings. Well, that was a while ago. Talk about it in here. Oh, I don't see any news on that. I don't want to close my... I don't know, just it rejecting there. Overtrade it, but... That was a breakout that needed. You got Grom yesterday? Well done. Open the world. Oh, really? Interplanetary exploration. Yeah, I thought you were talking about that, Don. Yes, that was part of the notes I put in yesterday. Listen to myself. How does a Web3 game work on console? It's just a normal game, but then I mean, how's it integrated? Still doubting myself. Doubt that you're doubting yourself. Because you can't, I mean, you can't like trade NFTs on consoles yet, right? Animera. Thanks to interplanetary conquest and exploration. Being built on Unreal and Immutable. There you go. Nice. Oh, spy.
Out here. And what we talked about last time we looked at Microsoft was in a very strange, unusual way. Look, each one of these areas of consolidation formed at a $34 interval to the downside. 334, 300,
BBY actually holding up
throughout
still.
last summer, and recently around 232 last fall into current levels where we're trading right now. But again, to the point, even though we have been trending lower, I want to just make it real clear again. Look at this, very much range bound and contained. There we are again, 265 to 212. So not a real lean here in terms of that intermediate time frame. Bigger picture lean, yeah, trending lower, right? Continuation more likely than change, we always say. Wanted to point out where we are relative to the 50 because the recent run-up has us back above the 50-day moving average, below the 200. But look, RSI kind of limited in terms of participation, just tough to get enthusiastic about Microsoft in the middle of a range that we've been in basically since August, September of last year. I mean, especially in a trend environment to the downside.
I see. So the trend environment to the downside. And Tom, I mean, you're sort of betting that both Microsoft and Apple. We'll talk more about Apple in a moment, but you're seeing some upside potential for these names. Is this a big tech play, or is it something specific about Microsoft that makes you think it has the opportunity to move a little higher?
It's specific. It's specific, and it's specific, Nicole, in the context, just as Ben said, that, yeah, I think we're going to get to that swing, which is the 263. But if we lay these on a weekly or monthly, we're still in a large ABC structure on the way down. I'm bearish, but we're traders. And my take is that we're trading it up to here. Yeah, yes, exactly.
I get it. Yeah, I see what you're saying. And for Apple, you think that could trade a little bit higher. You have a stop, but tell me a little bit about that one.
In Apple's the same situation. If we look at the, the shorter term deal, the top of this range in Apple is 157. What Apple did, same type of setup, took its swing out, had volume behind the move. That's telling you that there's funds in there that are buying it. In Apple's case, we're at 140, 186. I think this thing's going to run up to that, the bottom 149. That's kind of the top of the range. That's on the shorter term. Yeah, the longer term, my take is that we're still going lower. But it looks to me like both of those are going to basically come out with good numbers. It'll run it up. And what does happen after, the correlation between A to B equals C to D, when they finish off, they do something other than continue the same way, whether you're going up or down. They could go sideways. But my take is that the numbers are going to be all right, and, we get a little rally here in the NASDAQ. And that's where the divergence is. It's not in the Dow and it's not in the S&P, but the NASDAQ, there's buyers out here.
I understand. Okay, so you're thinking here a little bit bearish in the long term, but for the near term, some opportunities there to the upside. Ben, your thoughts?
Nicole, Tom, a recent run up in Apple to 143, to my point earlier, still has
it does seem like there has to be different hardware.
December high, but in a well-defined trend environment to the upside. You can see we're looking at the lower extreme in the bottom left corner around
it's saying it's going to go up and then it's going to go down.
All the way up to around 143. Now, what jumped out here in terms of this just intermediate look, the hourly candles,
116% on.
Take a look at this. I want to point out here, you've got a very well-defined double bottom that formed.
GME
Again, we're talking
5 bounces on anything.
124 level. So we rallied
or if we just
off
basically
that,
hit our double top and
as you take a look at this
on
move
voyage,
off that
we're going
lower
down.
extreme, you're going to see a very well-defined exhibition of these two phases of price development. This is what we were looking for in terms of Microsoft and didn't have on the intraday time frame. Here you can see the exact the structure you're looking for, because this helps you base a working assumption. We're seeing value form higher. You can determine when that working assumption is no longer valid, but at this point, forming value right around the 141 level. So trending higher and no rejection thereof at this point. Taking a look at where things stand in terms of the bigger picture, you can see Apple, the move up that we just looked at here. This is part of a longer term trend that we've been in, but you can see how we've been a little bit more sideways as of recent than not. I just wanted to establish a couple levels to keep an eye on. Let's start with, first and foremost, two well-defined areas of consolidation that formed, right? And we're looking at the longer term. Throughout the end of 2020 into 2021, prior to the breakout that we saw, we topped out again end of 2021 and then went sideways throughout all of last year, basically hovering around this 160 level. But as we're forming this area, the bulls want to concentrate on the middle of balance area number one, right? Because again, while we did recently break out to the downside, look, we never took out the key structure that was established. That middle is significant. 120 is the big level to the downside in Apple. We held above it. If we get through 150, 160, could open up a door for a retest of that upper extreme. But look at this, Nicole. We've got a move up through the 50-day moving average, still holding below the 200. RSI supportive of this run up here. But again, this is a longer-term trend move to the downside. We're just in this contained kind of range-bound.
Bottom analysis in a daily time frame? Sure, why not?
A lot of heavy lifting for the bulls to do.
Any technical analysis works across every time frame.
Yeah, sure. So
the longer the time frame,
but it's still there, sort of
the better.
What are your final thoughts here, Tom, as you think about Apple?
Holds a lot more weight.
It's a great trading atmosphere. That's the bottom line. You know, when you've come down so hard, I mean, if we look
That's
at
the bottom line. Here we go. Let's trade it.
You've come down from 180.
We'll go up. We'll go down. Let's go.
120. We're at 141.
Trade it. I don't even care.
And I think 160's game. And that's how it goes with good trading markets. You're not going to go all the way down at once, and you're not going to go to the moon at once. Yeah.
Yeah, understood. Were there any others that you were going to put into this as the other tech trade for something similar?
I was looking, there's these are the two best. That's the reality, because these are the two that did take the swing point out. They had the volume behind it. The QQQ also had the volume. The Qs want to go to 296. That's going to be the top of the range also. So it's saying that, you know, we know the NDX 100, you know, we get 11 stocks that are almost the whole N100. So you don't need much for that to actually happen, okay? And that could fool a lot of people.
GME
you know?
better
That's
not beat us a
the
boring
reality,
sandwich
which is,
today.
you know,
And it's at 288 today, so some opportunity
That
there.
would
Let's
be
turn our attention
bad.
over to Royal Gold. It's at 127 today. What are your thoughts on
That'll
Royal
throw off
Gold? Are you
everything.
feeling
That'll
a little bearish
make me
here?
think we could retest the
yeah,
lows.
this one's interesting.
Or even
I
new
mean,
lows.
the bottom line is that I trade this equity a lot. I like the gold stocks, and what happens with the gold stocks is that when you got it right in the way up, they're great. You got it right in the way down, they're great. So with this couple different, we're trading 127.76. You can put a stop a couple points above it, and I'm looking for this to actually go back to where it broke topside from. It broke topside at approximately the 116 area, and the reason is that you can see when it hit a high, it had no volume at all. It did 437,000.
127%
And then the next
on
day, on the
BIF.
way down, it did 670,000. When you see something like that, that's say someone's unloading it. I combine that with where gold is right now and the dollar. The
Blew through those
gold run has been really
resistances.
great. It's been a good run up. The dollar is trying to get off this low, and we'll see if the dollar gets off the low. I'll be correct in the assessment that these things are going to pull back. And when the gold equities pull back, it is fast and furious. So, you don't have to give this much breathing room. But if the dollar goes higher, which I think it's going to, as a counter trend bounce, you are going to see some big
trip per
action
day? I
very
don't
quickly inside the gold and silver market on the way down.
I try and trade less
Got it.
often,
Royal Gold, so you're selling that short.
Less
what do you think,
trades.
Ben?
more profit.
Nickel, RGLD, kind of a mix of the
Well,
two
it depends
names
on what
we
I'm
were just
trading.
talking
Trading
about, not
futures or
completely
options or
unrelated,
stocks.
right? Nowhere near the category of those tech stocks.
Whoa,
But
look at that
taking
candle
a
on
look in
SPY.
terms of the
Holy
structure,
smokes.
Technicals, I'll show you exactly what I mean. First and foremost, let's begin with the 30-minute time frame. You see a well-defined trend
That's
here.
weird.
From the November lows
Some
all
kind
the
of
way up
news?
to the January highs. We're talking, well, from 85, 86 to
yeah,
129
Grom, nice gap
last
up.
week. A very well-defined bottom left corner to top right corner. This is, as Tom put it, a good trade. Here it is on the 30-minute time
There's some
frame.
profit
Now,
taking
take
today.
a look. You can see, again, first and foremost,
Maybe a little gap
very
fill.
well-defined two phases of development, right? You get those high conviction
Ah, it's making an
phases.
island
Actually, over
bottom.
here, I could
Shout
have
out
drawn
Nighthawk.
a couple more if I got a bit more
Which is a sign of
granular and
reversal. So
pulled
yeah,
out
it's
that real
good. This could be
fine
good.
pen, but
I don't know the
I decided to
probability on
just
these
kind of
playing out,
focus on
but
the 106 area,
see how it's making this
111,
island?
119, 126,
Gap down to it,
well-defined
flat,
areas
and
of
then a
value.
gap
They've been
up from
forming
it.
higher and higher. Trend environment
So
to
it
the
might not
upside.
feel like
no
gap.
indication that that's not a valid working
Could be a good
assumption.
entry if you
But
like to play the
look, we've been
island.
a little bit more overlapping and rotational over the last couple weeks than not. We're talking 129 to 122. We've got a pretty
is
well
what,
defined upper and lower extreme to keep an eye on in terms of
what
the
BBBY made
more granulars,
and
the
on its
30s. So let's
reversal,
not
to
get
give you
too
an
sucked into
example.
this. Let's, when in doubt, zoom
Here
out
it is on
again
the,
and take a look at the daily
daily.
time frame. Now here we're kind of contained,
Easier to
right?
see on
You've
the
got a lower
hourly.
extreme 59, upper extreme around
See this?
147, and as I
Little
just
island,
identify it,
gap down,
not a real lean
island,
one way or the
gap
other
up.
in this instance in terms of the daily.
And then it's
So,
also inverse head and
again,
shoulders.
When in doubt, what do we
So,
do? One more time, we'll step back
you've
out
got
to
that.
the
That was
weekly
gonna find the
time
bottom-
frame, and
bottom
this
on
is where
BBY from
things really provide
127.
some clarity. You can see another well-defined trend
have that
environment.
big
We're going
move
all the way
up.
back to 2000,
580.
2001, the high I just pointed out to begin the year up around 147.
So, yeah,
you
looks
can
like a good
see,
entry.
and taking a look here as we identify some of these areas of consolidation that have been forming on the way up. Again, a very similar pattern, that staircase type pattern that provides us these areas where we're kind of focused on
Your
right
HLBZ
now,
buy today was
consolidating
nice.
around 120, and again, this is a longer term, but focused on
You bought it in
60
today?
being that next area. If the longer term bulls were to get below 60,
20%?
invalidate
You must have
the
bought
trend
it
to the upside.
yesterday.
But
Whoa,
here we
flush
go
on
again on
HLBZ.
the intraday trending higher, on a weekly time frame trending higher, currently consolidating though, much like the broader market. But again, a very bullish pattern here nonetheless here, and very indicative of what we've seen in terms of a longer term trend as far as gold, right? I mean, it's been rewarding
too
the
simple for
bulls
GME to
over the
rally
longer
today
period
on
of time. Currently,
T
though,
plus
in a very
2 from
wide
OPEX.
range, 16 to 2100.
Too
we'll
easy.
call it.
148,
All right, thank you for that. Any
150%
final
on
thoughts here,
BIAF.
Yeah, no, as Ben said, see, we're coming into,
Yeah, Tyler.
Royal Gold's coming into the downdraft from last April and May. We came down with 3.8 million shares on the weekly, and we're going up at only 1 million. That's when this thing is going to have to build more cars. And cars, Nicole, will be trading sideways, trading a little bit down to get rid of that supply line. That supply line is going to be hard to take over. And that's where that was the last high. It came off that high. It came off with some big volume. And the gold contract today is actually showing. The gold contract's only done 63,000 shares today when it hit a high of 1960. That should be up at about 150,000 shares at 11:30 in the morning. And it's not. So that's telling me that there's less buyers up here.
GME volume is not doing the same thing it did yesterday.
It didn't stick.
Or it had a,
That's what a
the
trade.
volume just kept increasing.
Tom, thank you for that. Tom O'Brien, CEO.
But
of
we could just get
TFNN
crazy volume coming in
and
anytime.
Lincoln Stein looking closely at the charts for the big three today.
Noon,
Thank you both.
maybe on the hours.
Coming up next,
We'll
we're going
see.
to spotlight
EU closes
5G.
actually in 2 minutes.
Defiance ETF
See
has a
if
mix of
that
semiconductors
moves stuff
and telecom.
around at all. Sometimes you get a market direction decided at EU close. Sometimes it'll rip, sometimes it'll drop, but you'll kind of see a noticeable change depending on if EU is pulling us down or pulling us up. Yeah, GME today is looking more standard volume, low volume. Sucks. Did get into calls this morning. Not down terribly yet. Brian Armstrong, CEO of Coinbase, has said this is the first time we've seen a crypto cycle coincide with a broader economic downturn. So potentially the best deals in crypto you'll see in a long time. Which I could agree with that. Italy's 10-year bond yield down 10.4 basis points, last at 3.9%, 3.913. An FTX executive flagged worries about Alameda Research's use of customer funds to Sam Bankman-Fried as early as 2020. All right, SPY's moving back up, retesting this high. Glad I didn't close anything out. Playing it for the longer term, longer trend. Like to see move back up to this high and then this high and on up to 408. Might as well be broken out of that downward trend line. Let's freaking rally and retest some highs here. Set up some fatty divergence that we can easily trade. Easily, not so easily. Oh, is it rejecting it again? Excuse me, rejecting it again maybe. 31 likes. Thank you, guys. Awesome. Legit. Maybe I should take profits on my futures longs. I don't know. This is a double top now. Doesn't do something. BBY, it's consolidating pretty nicely. I mean, it has sold off from the gap, but it's consolidating nicely at a pretty high level, up 13.4%. If it's gonna get like a big T+2 OPEX move, I don't know. Maybe it already had it this morning. Is that an engulfing candle? Yes. Let's see if this closes. We got 4 minutes on that one. Not liking the breakout. Yeah, bit of a bull fly if you include extended hours there. But yeah, here on the, I mean, if you imagine like that bull, which would be extended hours, then yeah, it's basically flagging at a higher level, which is good. Thanks to Closer, appreciate it, man. We're pretty, so far been pretty reliant on the market though. Unfortunately, I don't, yeah.
repriced the adjustment or the valuation for AMD due to the drop off in the PC side of the business here. So kind of interesting. We did see Barclays yesterday upgrade a couple of these semiconductor names. All of them were up on the session, but it seems like Bernstein actually kind of knocked down AMD a little bit here, obviously because of the concerns from the consumer demand.
Yeah, I'm gonna close my longs with
the
this.
overall macro environment.
This closed engulfing.
Yeah, and it's
I like
really
the
weighing on
upside, but
AMD. It's down 2.4%. The whole group, for the most part, has down arrows with the exception of NVIDIA. Kevin Green, thank you for that. We appreciate it. Senior markets correspondent here on the TD Ameritrade Network. Thanks, Kevin. Time to spotlight 5G. And joining me right now, Sylvia Jablonski, CEO, Chief Investment Officer at Defiance ETF. Sylvia, welcome back to the show. I haven't seen you in some time, and Happy New Year. Our first time chatting in 2023. We just spoke about a name, AMD,
40%.
a downgrade. I do want to
BBYA.
talk about your 5G ETF.
30%.
But that is a name that's one of the top holdings.
Yeah,
What did you think about that?
Pretty big rejection now.
Hi, Nicole. Great to see you as always. Look, I think the downgrade, I actually like it. I think that the price falling and hearing some negative news actually is something that feeds into an opportunity to buy it at a discount for the future. So if I look at stocks like AMD, which as you mentioned, we hold in our 5G ETF, and NVIDIA, you know, they're 40% or more off of their 52-week highs. They've had a nice rally this year, for example. And yes, there are definitely some headwinds. You have Ukraine and Russia, you have uncertainty around the China reopen, and also just trade tensions and things like that. But if you look at the bigger picture and you think about where technology is going and what the fourth industrial revolution will look like, you know,
The fourth industrial
ChatGPT
revolution
is the hottest word of the week, right? So for artificial intelligence to run, you need semiconductors, you need 5G. For electric vehicles, you know, driverless cars to run, for gaming to work, for smart cities to exist. All of these innovations require the use of semiconductors. So, you know, I think, you know, there are a lot of estimates out there. I know KPMG actually just put out a huge research report on this, predicting the
Industry
growth of the
4.0.
semiconductor space to have 250 billion of revenues in the next 5 to 6 years. So I like these names at these levels. I like to buy stocks low.
Smart.
I understand. So it gives you the opportunity to scoop up some more. Let's back up and talk about the ETF. It has a balance between semiconductors, telecom, is one more heavily listed and held in
Yeah, it's going to close engulfing, so we'll see if it bounces and probably get out of my ES.
We look at this is
Might
we
even,
want to give investors the
might even go
purity
short.
of exposure to the 5G theme and the 5G revolution, if you will. So, you know, part of that, as we spoke about, relies on things like semiconductors to power artificial intelligence, big data processing, you know, any kind of quantum computing and things like that. The other part of it is just wireless services. So if you think about connecting rural and urban America, if you just think about the lower latency that we all aspire to have on our cell phones and on our laptops on a day-to-day basis, you know, that requires 5G to run. So it really touches companies like T-Mobile and Verizon, and they benefit from this as we upgrade our devices and use their services. And then, you know, a third part of it is equipment, right? It could be everything from cell towers that are sitting out in the middle of a field to different other types of machines and routers and things like that run 5G. But basically, we want the purity of the space. And in order to do that, you have to touch defense, you have to touch communications, you have to touch pure technology like semiconductors and electric vehicles. But the two fastest growing areas of 5G are actually EV, AI, kind of combined there, and then wireless for the second pick. So
55%.
The ETF should see a bounce.
Right.
Nice. Okay. So at this point now, I just saw some of the top
Broke
holdings.
that
AMD,
resistance.
NXP Semi was on there, as well as Advanced Analog Devices was on there, and Nokia and Marvell are some of the other names. Tell me a little bit about some of these names and why they jump out at you.
That's 63
yeah, exactly.
next.
And, you know,
not a very hard level,
as
but
we mentioned, I think it's arguably one of the top semiconductor companies on the planet. You know, they have a very well-run business with the CEO,
nice
Lisa
volume.
Su, just is incredible in terms of her innovation in the company, and she's able to sort of pivot. So 5G is crucial to AMD is actually crucial to the growth of 5G. So I think the company benefits there. Same with NXP Semiconductors. It's another semiconductor company that factors into driverless cars technology, artificial intelligence, gaming, metaverse, they all sort of play their role. They have big roles in data centers and whatnot, which again, all of this is powered with the underlying 5G. So that's sort of how you get all of that. And then some of the other tech companies refer to gaming. Gaming is something that is likely to come back online and gather interest as well. There was this big hot focus on everything that is the metaverse, and until we get there, who knows where that turns out. But in the meantime, we have all of these cool gaming types of companies, like Roblox types of user interface and integration experiences, and again, all of that runs on 5G.
Yeah. Let's go back in history. You were looking over history and where the opportunities lie when we're concerned about a recession. I mean, for example, at the top of this report, you said, look, a pullback in AMD is probably a good opportunity to step in. Where do we stand as far as what we're seeing in the economy and what you tell investors at this time?
Yeah, so I think 2022 was just a pitiful year for the markets, and it was partially due to, as we know, the Fed raising rates, persistent inflation, valuations that were sort of overvalued and just really shot down, and investor sentiment went highly negative. I think 2023 is going to look a little bit better because the Fed is sort of at the end of their hike cycle. Even if they stay there for longer, valuations are already down. So the froth has been taken off of the market, and these stocks now look like more interesting buys, especially for investors who have holding periods out beyond 2024. And I think that this year you're going to find, I think we found the bottom. I think we're within range of the bottom, and it's impossible to time the market. So I just think about, again, value creation, dollar cost averaging, and thinking about my investment thesis for being sort of beyond this year. To the point of semiconductor stocks, they've rallied 10 to 20% already this year, right? But they're still down 40% off of 52-week highs. So got a ways to go.
Sure, the volatility is there, and the opportunity, as you're saying, as long as you're looking longer term and not focused just on 2023. And luckily, you have the time to do that. I mean, and most folks do. I mean, unless they're right into retirement and they have to trade a little bit differently. Sylvia Jablonski,
Absolutely.
Wonderful to see you. CEO,
You too,
Chief
Nicole.
Investment Officer, Defiance ETFs. Thanks for being on the show, Sylvia. Thanks. Coming up next, disruptors. Every day, George Sillis takes a look. Today is Toast, and we'll find out why the restaurant-related stock was downgraded today. He has all the details for us next.
Toast? What? What is this? Cloud-based end-to-end technology. Virtual restaurants, like a square. But more. Yeah, point of sale. Meta's spending on lobbying decreased by about 1 million during the final 3 months of 2022 compared to the previous quarter. Uh-oh, Superstonk is weighing in on glitches.
With Microsoft, I think Amazon will have a big effect for cloud.
So, did have that engulfing candle on that projection of the top, but now it's potentially just consolidating at this higher level for a breakout to the upside. I guess we need to wait to see if it does break out to the upside. Longer terms, it is bullish still. This daily is a little sketchy. Still kind of a cup and handle though. That divergence is on the daily is what I'm curious on what happens with that. I close my long here. Might go short. But that goes against what I'm wanting for GME and BBY. Oh, BY a little tick up. BIAF holding up nicely, 146. IRNT 50%. Avia 38%. These are ones we've mentioned for the last week or so, just keeping them on our radar. Not BIAF, this one kind of came out of nowhere on that news. But IRNT, AVYA. I do like the cup on handle theory.
Downgraded the stock to neutral from outperform.
Toast.
Actually cut their price target marginally by $2 from 26 to 24.
Yeah, and marginal price target cut there. To your point, I was looking at that comparison between Toast and Square. And look, I couldn't get over a Square, which is now Block, the volatility that we saw, because if you look 1 year, it's down 30%. If you look year to date, it's up 30%. And while the arrows may be the same, Toast was certainly better behaved, right? 1 year it was down 5%, year to date is up 18%. Tell me about how you would go about trading Toast.
Yeah, so looking at the stock, Nicole, the company will be reporting in February their earnings per share. I think it's in mid-February. But one of the things we can consider is looking at the market. A lot of people are talking about how fantastic the market's been performing since the beginning of this year. So that might be short-lived. We may see a pullback. So what we can do is actually look at Toast from a 1 year standpoint. You'll see at $23, there's a lot of hesitation or resistance at that level. So what we're going to do in this case is put on a bearish to neutral trade by selling a call spread. So effectively, we're going to be selling above
Now
that
setting up and
$23
engulfing the upside
price.
potentially.
We'll be selling the March $24 call option and then simultaneously buying the $26 call option.
Might not be a breakout day. It might just be
what
range
we're
bound.
doing is we're
Some chop.
defining our reward, but also defining our risk. And so altogether, this is sold for a credit. Now you could receive about 50 cents a share or $50 a contract. And so the whole objective here is for the stock to trade below $24 between now and expiration in March, which is in 52 days. And ideally speaking, it does have about a 66 probability of success, meaning that the probability of it staying below $24, in other words, achieving profitability for this trade is 66%.
All right, George Sills, thank you for that. A good look there at Toast today as our disruptor. Thanks, George. Coming up next, our panel is ready to take a look at the rails. Union Pacific reported its earnings earlier today, and we'll dive into those numbers, that and much more. Trading 3.
We believe the January market rally is once again stemming from a bout of institutional investor short covering and rising equity demand from retail investors, per Vonda Research. Scholes says severe recession many predicted has not materialized. Schlegel says SNB expects weak growth of 0.5% in 2023. No recession. They're alluding to a squeeze. I do have to say, if GME doesn't make a move today, I'll probably close my longs. Get back into maybe some cash secured puts on a good red day, and see if we come down and retest this, or come and hit the lows down here. $10 magical number. But it could take some time. I don't know. Is that not giving enough room? Enough breathing room? Especially if the market's not supporting a breakout, kind of continuing this short squeeze rally or bear market rally. It sets up this divergence. I thought it was lower than that. We're kind of above the trend line there. Move this that high. Yeah, we are above it, huh? We're above that trend line. I mean, it depends on where you draw it, I suppose, but I think just about everyone would draw it there, or somewhere in that, close enough to where we're above it. Much more bullish. I mean, maybe a retest back down on it, use it as support, but
quarters, and prices are trending higher again. That's something we've watched as inflation has taken hold. But Union Pacific is a very well-managed company, and I think they've established some beatable targets in 2023.
with SPY above that trend line,
if they were able to exceed
makes me think the rally could definitely continue going.
Which are pretty low right now.
I thought we were kind of bouncing up against it, but
okay. So what do you think there, Lee?
Well, I think you got, as usual, some headwinds and tailwinds. I think one of the tailwinds is the valuation with them. You know, they have 15 times consensus 2023 earnings. They're also have a PEG ratio lower than the industry average. I think it's 176 versus industry average of 189. Also, I think it is, you know, they are a dividend aristocrat. They pay dividends forever. So you have a lot of those type
we'll see. Might wake up
characteristics
towards the end of the day.
As they like to return cash to shareholders.
Kind of need that to happen for.
They are doing more buybacks.
I think.
Vis-a-vis their peers.
I think if it doesn't happen today, it's
minus S&P rating, which
quite unlikely we get a rally,
that is in the
like a significant rally in the next.
Financial strength is great. I do see the long-term and short-term headwinds, if you will. That short-term is their intermodal revenues, which is 21% of their revenue mix, could decline You know, because they've already done a lot of stocking with this inventory, so the intermodal business might be a little bit less. And then longer term, you know, just put this in the back of your mind, they are very independent on moving energy plays around, right? But there is a shift going on, you know, to electric cars and clean energy, which over the longer period of time could impact their industrial business, which is 23% of revenues.
Sure. And, you know, John, how do you feel it stacks up against the peers? I mean, some of the issues are across the board. I mean, whether it's fuel costs on the rise or weather-related issues or labor, these are things that probably plague each one of the railroads. But when you think about Union Pacific and you compare it to the others, John, which ones are the best of the breed?
Well, I agree with Lee that Union Pacific is very focused on returning capital to shareholders. They've paid dividends, like he said, forever, and they typically grow their dividends at an accelerated rate from 5 to 10%. Their yield is higher than the other rail companies now, which I think strikes a real note of value, which is a little bit different from what Lee is saying. But I do like the dividend yield of Union Pacific. And getting back to the profit growth, over the years, Union Pacific has been one of the absolutely most efficient of the rail companies. It took a step back here over the past couple of years, but I would expect to see management get that operating ratio into the 57, 58% range. And that's going to really drive earnings growth, I think, over the next few quarters.
Oh, yes, sir, please.
And you know, John, as we think about the economy, so much of how the rails do is based on the economy, right? The volume, what they move, whether it's autos or materials or whatever, right? I mean, what are you looking for to keep these rails busy?
Well, we're anticipating a slow start to 2023 with the economy. The consumer's relatively tapped out. Interest rates are headed higher. But for the second half of the year, we think the comparisons will be a little bit easier and, you know, hoping the unemployment doesn't rise too much. So I would anticipate that volume growth, which has been on a downtrend now for the past 3 or 4 quarters, will reverse that trend in the second half of the year. And that'll give Union Pacific management an opportunity to generate some operating margin leverage.
Thanks.
Okay. And Lee,
you long on this?
You were saying that Union Pacific and only one other have an A
rail
rating
infrastructure
in
is
your
old
mind.
and stagnant.
There are several names in the bunch. Tell me a little bit about the landscape of all these names.
They offered have a share offering.
Right. Well, you know, just looking at a trading
Yep.
basis,
Public offering.
as I said, valuation metrics are making
always the risk.
Probably Union Pacific a
Any
bit
stocks ripping up crazy.
Totally lagged its peers, right, over the last year.
Any moment they can just halt it.
17%.
Offering.
The Dow Jones Rail Index is down 12%. But you've got the other A-rated.
It'll probably bounce back from this, I would imagine.
CNI, and they've actually
most reactions are overreactions.
So, you know, maybe this will start mean reverting, but
hard to know.
From a trading basis,
I'm not following this one at all.
52-week lows can sometimes lead to lower lows, at least in the short term.
Come on, cup and handle.
A report that said also
sip us to Gloryville.
January, their volume fell by 0.7% as this vis-a-vis the same period last year. So I agree with John. It's going to be weak for the first, you know, couple quarters here, but maybe a rebound later in the year.
Right. And final thoughts here, John, as we look, I mean, when we think about how these have done versus the Dow Jones Transportation Average,
That's a good point.
Union Pacific's actually slightly below. But the big picture, I mean, what's
yeah, you
your
put a stop,
takeaway
like a break even or something.
I like to, I mean, certainly follow earnings growth, but I also like to follow the dividend growth. Because I think
back down to
if a
VWAP
company
here.
is raising its dividend aggressively, it's telling investors that it's
about
got
the
a clean
volume is
balance sheet,
not
it's focused on shareholder
not looking
returns,
good
and
like
management
yesterday
is
yet.
confident in the near-term outlook. And I think you get that with Union Pacific.
BBBY's price action's nice though, nice consolidation, getting tighter. Break up or break down?
Thank you both. John Eade, President and Director of Portfolio Strategies at Argus Research, and Lee Bowles, Senior Manager, Trader Education at Charles Schwab.
I wonder, I'm curious if I should go into Grom.
And thank you, friends, for joining me here every single weekday, 11
That
a.m.
island
2 p.m.
formation.
Eastern Time, right here on the
Never
TD
really looked for it, but it's pretty evident here.
Fast Market is next.
As long as it doesn't feel like gap, I guess. SLGG. I haven't seen this one up on my list for a while. Similar chart to a lot of them. Alba's moved up there, up to VWAP. GNS also.
I'm a little trash here. So
Right there.
Oh. Mom, I found it. That is dry.
Not sure we caught in cycles. I'm not, I don't know about that. They do seem to be correlated though on their price action. They kind of have been moving in tangent, which is very strange. So, but yeah, I can't explain that. M-Game? Check that out. I got the M-Game. $111 to $113. On a shorter time frame. SPY's coming back down to VWAP here. All right here. Where? Wait, 111 through 13. Oh, SPY. Dump there. VWAP. Let's see it. This? Oh. That's a crazy chart. Those candlesticks are huge. GME didn't actually flush too bad yet. Probably about to though. Same with BBBY. Give me 3-4 letters to trade. Hey, he's my little leprechaun. SPY's flushing here. I don't know if there's news. Looks like that engulfing candle and the double top did end up becoming a good indicator, good signal. I started looking at it as like a bull flag and like consolidation then. This longer term though, much longer term than the daily. Could be doing something like this, but yeah. How today ends will be pretty telling, I think. which direction the market's going to go. I'm not in GNS. Nope. Note that trade for now. I moved it over to GameStop. Smart choice, huh? Mine's just default VWAP. I don't think there's like any settings you can have on VWAP, right? It's the volume weighted average price. It should all be the same. I've been told that Weebles is a little bit different, like a little bit off, but I don't know. On MGM, yeah, I figured you want me to switch candle lengths. Didn't care enough. Oh, right here. Yeah, but that was in a... No, this didn't fail, because this was in an uptrend. It's a reversal, so if this was a long downtrend and then an island, I'm not counting that one. Right? If it happened here, an island here, after a downtrend, and then it went up and then it failed. But this is much more of an uptrend. So get out of here. Island lives. And Grom's Island's dope. Because it's in the bottom of this long downtrend. And it's a longer time frame, it's daily, so. BBY, I don't know. I mean, so far it's just been consolidating at this level, which is good. I mean, it's up 14-15%. I might have an aftermarket or after late day move with GME and other ones. We're kind of still anticipating that. So maybe BBY moves with it. Yeah, no, I haven't gotten back in it again because of GME. I put pretty much all my capital in GME for this rally. So, yeah. But after today, maybe tomorrow, I'll have freed up capital to go trade other stuff. It looks good. I mean, GNS and HLBZ. And they're really high, of course. RSI is crazy. But they are kind of consolidating at this range. I guess now you would just be concerned with like a share offering or something. But not sure if the CEO of GNS will do that at this point. It seems like he definitely has a mission to get rid of shorts, so maybe we'd wait for a higher level before he starts offering shares. Not sure why we just had a dump right there. These guys certainly weren't talking about it.
It was more negative on AMD versus Intel. However, we did see Susquehanna, I believe it was yesterday, turn
Is that how you're supposed to say it? Susquehanna? Not Sasquatch? Sasquatchian?
So right. Somebody's bound to be right.
Susquehanna.
Not a consensus
Sacagawea.
you know, who's going to end up being the winner in this space, despite the fact that everyone can agree.
And
that
right back up. Good thing I didn't get shaken out there.
Worsening. But in terms of the overall breakdown
Wow.
for AMD, there are 31 buy ratings.
We got a MACD crossover to the bear side.
I said over the past year, there are 31 buy ratings, 10 holds, and no sells. So not a overall consensus of.
I think so, yeah. I've looked up the different probability percentages, probabilities of different patterns.
$85, so $10 upside, $11 upside from here.
So, you know, nowhere
I haven't
near
confirmed it
the
with other
November
websites, but this one
2021
website
highs,
gave me different
but still
probabilities, which is kind of
positive calls
interesting.
for AMD on the whole.
Head and Shoulders is actually a pretty high one, pretty high probability. What was a low probability that it's used a lot?
The next 2 quarters are going to be the bottoming cycle for these
I
companies.
think cup and handle actually is a not low probability, but one of the lower probability ones.
To Kevin's point,
I think that was the one that is saying it gets used a lot, but it's actually not as probable.
That's also going to dent maybe demand here moving forward. All right, thanks to Caroline Woods, senior markets.
Yeah, you just have to search it probability of technical analysis.
Don't buy green bananas. You want us to look 2 quarters out? I don't look at 2
I think Head and Shoulders is
That's
pretty high
only
up
a
on
few
there.
days until that
And then
ripens,
both
so
like
yeah,
the flags,
a
bull
little bit
flags,
less.
it
All
kind
right,
of
let's
says.
bring in Randy Frederick, Managing
Maybe it was
Director of Trading
those
and
that weren't
Derivatives
very.
at the Schwab Center
No,
for
I think it was
Financial
cup and handle.
Research. Randy, I wanted to get your take here on the markets. We're off a session lows. It seems like
Yeah,
the
Head and Shoulders I
optimism
think was one of the
starting to
higher
build.
ones.
We're getting above some
An
key
inverted Head and
levels
Shoulders,
as
of
far
course.
as technical basis, especially in the S&P 500. Is that what traders are kind of looking at right here, and
probably
investors, as the fact that
test the handle and the cup and
we're
handle.
over a hump as far as a technical basis, but we still got
Yeah,
a
I mean,
lot
like, is there a certain amount of retrace that has to happen in the handle?
Well,
How do you assess the handle? Is it like a 25%?
Well, people are looking at technicals.
Something
As
like
you said,
no
if
more,
you're
no
a
less?
short-term trader, technicals matter a whole lot more. But you're right, as far as the S&P 500 goes, yesterday was
That bounced off a
pretty solid day
fib.
because we saw the S&P 500
So the cup and handle
break
could
above the
also be an
long-term
ABCD
downtrend,
move,
which just happens
right?
to be converging almost perfectly with the 200-day.
It's just the
moving
second
average.
leg of
But I
it.
think we need to go before we finally can say we have some breathing rooms about that 4,100 level. We've seen a couple of times previously where that provided some pretty heavy resistance. Again, we have a series
Yeah,
of
I mean, they're typically
of
longer
lower
term, and
highs
all
that have occurred
TA
since
is
all the way back
more
on the first day of
predictable
last
and
year when this downtrend
probable
and
in a
this
longer
bear
time
market
frame.
began. Yesterday was the first breakout above that.
Some
that
stuff I don't
hasn't
like to use
failed
on a shorter
yet.
time frame.
We had failures 4 times.
I'm not like
previous
looking
to
for
this,
cup and handles too much, but
breaking out above that downtrend.
I feel like
We finally did
they're
it, but I, again,
in
really
hours
certainly
long
don't
enough
really have
for
any
cup and
comfort
handle,
until
but
we
maybe
get
not.
a little bit further
People say
below
like
that.
1
I'd say
minute,
that 4,100
5 minute
level
on.
is
I'm like,
the place
I
where
don't
I would
know.
look at.
Yeah, definitely. We always talk about some confirmation on breaking key levels, maybe 2, 3
Only 10%
trading
and decrease in
sessions
volume.
before we get some full confirmation.
So
And to
basically what we
Randy's
have
point,
right
we've
here
broken
on
above
GME.
that level, that downtrend level, a couple times,
Decreasing
but it hasn't
volume.
held at all, Kevin.
Oliver Rennick
And
puts
it's
a chart
just been
up
a
every
small
morning with the
retrace.
S&P showing that downtrend, and we're
There's the
right
handle up here with
on it
volume.
right now, actually
Yep.
just above it yesterday. So I'm not the
Or
technical,
you just buy at the bottom of the handle and try and
expert
time the
here,
bottom every
but
time,
I'd
and then
like
it
to
dumps.
know, when is that confirmed, or is it
Whee!
ever confirmed? Right? If one bad day, like if Microsoft were to miss and
Yeah, I mean, SPY and
weakens,
GME honestly
their-
look
some
very
of their
similar.
outlooks, it
This
could break back below
high
that
on
and come
SPY
back
is
up.
higher than
So,
this
you know,
side of the cup,
when is the
and
all
higher than
clear
GME's
on
also.
breaking through that? 'Cause Randy's
Not sure
right,
if that
the chart,
matters. They have to be
you know,
perfect.
That converging of the two.
I know I've seen
moving
Head and Shoulders
averages,
drawn all sorts
it's
of
going to get interesting in some of these
crazy
days, especially in the S&P
ways.
500.
Yeah, and Randy, we had some data today. S&P Global Manufacturing PMIs, a little bit better than the previous print. Third straight month in contraction. Is this kind of reflective on what investors and traders should get used to? Is the
Our
fact
deer,
that, hey, we're still
it might be your deer.
worsening
It'll probably
economic
run on the
environment at
coattails
this
of
point.
GME,
Before
or
you start, loading up on equities,
we'll follow
and risk on sentiment
Anchor.
like we have so far this month.
So
maybe you should take a pause here.
Yeah,
Yeah,
its
like I
chart
said a
actually
minute
looks
ago,
bullish also as
fundamentals
far as
just
momentum.
overall are not very good. We had a
Nice
pretty
green over the
substantial
9, nice
downgrade in
consolation up
earnings
here.
expectations in Q4.
This is
On
kind of
the
a
average quarter, you end up with about a
bear
2 to
flag, but
3%
it's in an upward trend.
downgrade
So
in terms of expectations as the quarter
if a move up happens on
progresses.
GME, like we're
In
expecting,
Q4, that was
AMC will
about
probably follow
6.5%.
or do the same
So it's
move.
pretty negative.
Whether
So
it's
if there's
following
a
or not, I don't know. But
it's usually that things are really negative. In
yeah,
other
and the
words,
percentage move
the expectations
probably will be
are
bigger than
set low
GME,
enough
as
that
is
sets you up
par
for
for the
some
course.
upside surprises. But the overall fundamental backdrop
No, just
isn't
kidding.
all that
GME's gonna
great.
go
As you
further.
said, we're
Come
in
on, come on.
contraction on both the manufacturing and the services side
Better
of the
cups
PMIs.
have handles just
We
below the
know
high,
that
not above.
We've had all sorts of other economic data, with the exception of the labor market that just doesn't look all that good.
Handles just below the
question
high,
is,
not
can
above.
can this market hold? Is it possible for the
Yeah,
Fed
like
to
here.
continue to walk that
So on
tightrope
SPY,
of that soft landing? Maybe
this high was
It's
high,
still,
though.
I don't think the jury. I think the jury is frankly
high.
still out on all this, so we just don't know. But you could look at all of these layoffs
Here we
that
go.
are happening across the tech sector. And
Dink
see
says
that
it's a
as
buy at the
negative. I would
breakout
not
of
do that.
2022,
in an overall
22,
bigger,
22,
longer term sense,
22
is that a good thing?
with
No,
volume.
But in an environment like we're in right now,
I would agree.
if these companies are
Instead, I bought
acknowledging
now
that they overbuilt,
today and earlier.
that they overhired, and all this stuff during
Good average
the
though.
last several years when money was
This is,
free, and
you
now
know,
they realize
down.
they need to get to a leaner, meaner crew. That's a good thing. Overhead, the largest piece of overhead in any company is payroll. If you can cut that payroll down.
5 day. What time frame are those candles? How about this one right here? Yeah, it's nice. Nice little
so you take care of that
bull
problem.
flag.
You get to a meaner, leaner scenario where your costs are lower. That sets you up pretty nicely going
25
forward.
minimum.
Yeah, and one of the key components in this tight labor
It was, my
market
dear.
at this point, that's going to be difficult to do, to start bringing down wages, because I know that wages
Moon
for
Pirate
people
says
that
the
are changing
45. He said
positions
it.
is actually exponentially higher than what they were getting
25
paid
was a
previously.
fluke.
So a tight labor market might put
Manu?
some constraints on that. But we did have a bunch of earnings, Kevin, and it's like a mixed bag. It was
Haven't
like,
I already
was
played
taking
Manu to the
a bunch of
downside?
boxes
Yeah,
this
when
morning.
was it?
You know, some good reports,
Huck,
and then
Huck throwing
3M,
Manu
pretty
puts
negative
out in the
on
chat.
that side.
Finally, it might be a good time to play puts. I started running puts up back here in Manu. Look at this thing.
Fears when it's not maybe as bad for maybe GE.
It just stayed flat up here. Wait, this has the news of getting bought out or something at this price, maybe?
Nice,
yeah, exactly right. So housing getting a little better.
Yeah, this isn't going to drop if it's getting bought out at that price.
A contractor getting a little better with war. You know, I think we're selling a lot of things during this
25
moment, so not
was a
surprising
typo.
there.
Moon Pirate's
How about
confirming
GE,
25 is a typo.
The overall
Guarantees 45
renewable
by
energy
February.
doing horribly, but GE
I got
is
huckstered,
doing
man.
extremely well. Jet engines,
yeah,
right?
And that's going to be GE in about a year.
That's going to be GE. Whatever that is, GE Aerospace, yeah, it's that GE.
SPY is moving up here.
Is the one that's really the problem right now.
I've flipped around so much today.
Yeah,
I
struggling
don't care to mention
with
it.
costs on that, weight on their overall performance. Randy, your takeaway here from some of the moves that we've seen in some of the stocks, they're not too hot, not too cold. They're not probably as bad as a lot of people expected some.
Let's see it. It's 12:15.
It's
time.
The earnings so far this season.
Well, earnings are not spectacular.
You know, in the next
what you would expect in an environment
3 hours,
where
GME
you've got higher
could get to
top line
45
numbers.
like
Obviously,
Moon
if
Pirate
prices
says.
go up because
That's
of
all it
inflation,
takes.
You bring in larger revenues, but you've got lower bottom line earnings results, which is exactly what you would typically expect in a high inflation environment, because yes, you brought in
British,
more
that's not
revenue,
going up.
but input costs went up even more, so you end up with a not such a spectacular season. But again, it's kind of like when you play a game. It doesn't really matter what your score is. All you got to do is do better than the guy next to you, and then you can win.
Good, sell cards, buy
If you
GME.
set the expectations bar low enough, and other companies do really bad, if you just do
And
sort of bad, you can do
SPY's
better.
slowing down.
And ultimately, there's always an opportunity out there. And right now, if you're an investor in this market, you're not necessarily looking for spectacular. You're looking for
This
what's a
triple
little better than
top is
everything
going to
else
break,
out
watch.
there. And
Isn't
again,
that
there
triple
are a
top's
lot
gonna
of
break
big,
out.
high-quality names out there that we know are going to be around.
GME looks like it
5
wants
years
to.
from now, even a year from now. We know have big balance sheets.
Yeah.
We know they're
Selling down,
leaders
holding
in
up
their
nice though. View up
industries,
super
and they're
high.
on sale right now. Does that mean you're going to knock it out of the ballpark
Guaranteed.
in the next
Pretty
quarter?
good consolidation.
Probably
Also,
not. But
Avia,
accumulation is the
right at
name of the
BWAP.
game. Yes, we like to trade, but we always caution you should
BBBY
only
just
carve out about
boiling up
20% of
tighter
your
and tighter.
account as a trader. That other 80% is the long game, and the long game in the end is who
Alpha's
wins.
nice consolidation, man.
Yeah, profit margins probably getting to get squeezed here, as Randy mentioned. You know, maybe revenues up there, even though revenues are coming in lower on a percentage basis of beats.
Need today to rally a little bit higher before close to get this divergence off our back.
Profit margins definitely getting squeezed here a little bit in this inflationary environment. All right, guys, let's take a quick break
Need to
here.
close up at the
and coming up
406,
after that, we're going to
402.
take a look at Microsoft, that big tech company, the juggernaut. Reports earnings post-market today.
Oh, it's after hours, yeah.
Expectations
All right.
Pretty muted at this point. Fast market.
Yeah, markets may be waiting for that. Waiting for that earnings. GME. No volume yet. No, I'm not expecting 45 today. Moon Pirate's expecting 45 today. I am hopeful for a move to 35 or 40 by next Friday. But if it doesn't start today, my probabilities of it go way down. And I will be reducing position and exposure to a move like that. We're gonna close at 24.40. Could be one of those delayed rallies potentially. I don't know. That's why it will be reduced for me, but I guess not gone. Faith has been restored. That's all I have to do, man. Just cruise Supersonic for 5 minutes. Janet Yellen has told the IRS not to use the additional resources to increase audit rates for American families earning less than $400,000 annually. U.S. continues to see more concerning activity from Chinese companies in relation to Ukraine. U.S. will continue to communicate to China the implications of providing material support to Russia's war against Ukraine. GME melting up oh so slowly. What's Best Buy doing? BBBY following suit. Back on up to VWAP. What U.S. officials are seeing is non-lethal military assistance and economic support from Chinese companies that stop short of wholesale sanctions evasion. These wall hacks. U.S. continues to see more concerning activity from Chinese companies in relation to Ukraine. U.S. will continue to communicate to China the implications of providing material support to Russia's war against Ukraine. Doomsday clock moves to 90 seconds to midnight. Dong dong. As nuclear threat rises. Ken Griffin's Citadel earned $16 billion in 2022. The next best hedge fund earned $8.2 billion. We just watched that Bernie Madoff documentary. Kind of interesting how he was outpacing everybody else so much. Yeah, that was an interesting one. Well done. It was well done. Yellen repeats, Treasury can likely stave off default until at least early June. Stave off default. Yippee. U.S. Spy, are you really doing this again? U.S. expected to sue Google over alleged abuse of domination of online advertising market. U.S. Justice Department's antitrust lawsuit against Google expected to include about 8 U.S. states. U.S. expected to sue Google over alleged classified documents found at former U.S. Vice President Pence Indiana home, says CNN. Yeah, BY has a nice little bull flag going on here. A rip, consolidation. Spy needs to break out though. Not liking these rejections up here. Yellen, the Treasury will stop full investment in the government securities investment fund. Thank you guys for your 33 likes. 36. Appreciate it. Stave. Where is proper pronunciation? Stavy. Thank you. Steal from retirement accounts. Oh, thanks. Yeah, I kind of lost it there in the translation. To stave off. Stave. Yeah, Stav.
proving to hit the estimates and could see the stock fall as a
I
result.
said Stave.
Yeah, I haven't seen the
So
market
people that
this,
weren't as
antsy
educated as me
about a
could understand what I was
Microsoft
saying.
earnings event in a while.
Oh,
Correct.
Stave.
All
Yeah,
right.
got
Thanks,
it.
George. Appreciate
See?
it. That's George Tillis,
Makes sense
Senior
now?
Markets Correspondent, helping us break down Microsoft. Kev, I'll go to you first here real quick. Yeah, they're investing in Chat AI, or Chat GPT.
Third time they invested. This is the third round of funding.
Stavey off.
But to George's point, this will be a
Stavey.
good barometer
Stave.
for what CapEx spend is going to be on the enterprise side
Stave
and
off.
the Azure side. And I think that's the
Hold on.
concern that a lot of investors and traders have.
If you're watching Microsoft today, Tom, what you want to know is what's going to be the one key thing that everyone's going to
Stave off.
pivot off. Right?
Stave? It is
Azure
Stave?
growth?
What the
Is
heck?
it
No.
ads,
I'm
digital ad
speaking
spend?
in Old
If
English.
Those two are good.
Old
are
English was
solid,
Stav.
are firm. Is that enough? Even with everything else going on, I mean,
Stave off.
You
layoffs
stave
are
off.
starting to be
That's
more
like a
embraced
cuss word in
by
my
the trading
family.
community, right?
We
It's
talking about
actually
staving
starting to
off.
be taken as a net positive as they're getting their house in order.
To stave
But
off.
They need
Some
Azure
people
to
say
grow,
stave,
continue
but
to
I
grow,
think they're
or not to
ridiculous. Those are people that say
accelerate in their growth. If they can do
tomato.
that, get a bump in digital ad spend. Now I think you've got something to play with here in Microsoft.
Yeah, I think
Salsa
that's a key
Verde.
because that Azure growth has gone from about 50%
Barbacoa
growth
tacos.
as recently as
Green
September
salsa.
of
Ay, 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 ay,
21, down to about 35%.
Right. If you get that bumping up again, much like Netflix and their subscribers, it's like, what is the measurement that triggers this stuff?
Stave
We
off
want that trend
those
to continue in their
barbacoa
and
tacos.
consolidation works too. Let's bring Randy back in. Randy, your
Stave.
thoughts here
Get outta
on
here,
Microsoft going into earnings, and I know you got an example trade for us.
Yeah, so let's just talk about a few of the things that George talked about. So he mentioned, as I did earlier, about perhaps the expectations bar has been set low enough. In other words, is Microsoft the cleanest shirt in the dirty laundry bag? Perhaps. Layoffs, while not positive on the surface, do tend to cut overall operating expenses. Clearly, with their investments in gaming and AI and all these other things, they have money to spend. Historically, if you look at Microsoft, the stock has a long history of popping a bit on earnings because they have a tendency to beat earnings expectations. As you guys mentioned, they are virtually unchanged year to date, which is a pretty substantial underperformer. So you could look at that in two ways. Does that mean they're going to continue to be an underperformer, or does that mean that, again, the stock is depressed enough that if there's an upside surprise, perhaps you get a pop? I don't know. So you have to decide which direction you think it's going to go. I agree with George. This is probably a pivotal earnings season, and we're probably going to have a breakout in one direction or the other. I don't know. So you have to pick one. I thought perhaps we could look at this as possibly a bullish opportunity. So here's an example trade. Again, not my opinion. I'm not saying buy this stock, but let's do an example trade where you have a slightly bullish perspective for all the reasons that we've talked about. This stock only pays about a 1% dividend. That makes it, in some senses, less attractive to own the actual equity than other stocks that might pay a better dividend than that. What we're looking for is just a potential move on earnings, which are coming out tonight, which is why we're talking about it. One way to play that sort of a perspective is to use a relatively conservative trade where you're just trying to make a little bit here in the very short term. So I put together what we would call a bullish credit put spread. So with an expiration at 127, which is at the end of the week.
Okay,
not
I
very
discussed
far
with my
out,
wife.
Perhaps you buy the 235 puts and at the same time
It
sell the
might be
245
stave off.
puts. So this makes a $10 credit put spread. When I was looking at this about 20 minutes
And
ago, you could do this for a net credit of about
color, I accept spelled
$4.30,
either way.
which then becomes your max gain. This is a trade where you collect your money up front, you sit tight, and
Oh,
you hope everything basically
SPY
just
didn't break
expires
out.
worthless, which
Still
is what
waiting.
will happen if Microsoft
Gabe,
is above the
thanks
upper
for that.
strike price at
Thanks.
expiration at the end of the week. Your break even on this one is going to be less than 241, which is actually below the current market price. So while we'll call this a bullish strategy, what it really is a not bearish strategy. If the stock stays sideways, which sometimes happens on earnings, not always, or goes up at all,
this old SPY has
there's a
rejected this
potential there.
level
If it goes
3 times
completely
now.
the other direction and heads lower, then
What's it
you're
all
at
mean?
at risk for the difference between that 430 credit and the spread amount, which is 10. So that's a $570 potential maximum loss if the stock just crumbles.
They should
So
wait
if it
for a
stays flat,
breakout.
you're going to make a little bit of profit. If it goes above 245 on earning, you've got a max gain where both contracts expire worthless. All right, let's break this trade down. Randy's selling this example trade, January 27th weekly series, 3 days till expiration, short-term earnings type play, selling that in the money 245 put, buying the 235 put, staying risk defined.
Iron
break even
T.
240.70 if you collect around $4.30 credit. Kevin, this is a pretty aggressive put vertical, but if you have a stance, you're still staying risk defined, right? You've got some assigned risk if the stock's within, within those strikes at expiration or into expiration. But it's an aggressive spread, but you're collecting quite a bit of premium.
You have to remember that Randy started.
I'll check it out. I'm not gonna watch it on here.
This is a bullish
I like Russell Brand though.
trade, right?
I've liked him for a while, man.
Therefore, what he did, if you were
very
neutral
interesting
to slightly bullish, and we talk about out of the money, high probability put verticals. This is not that trade. This is a more aggressive. How do I know? It's
Alpha's down to
26
5%.
right? It's a bigger trade. You collect more money, therefore you have the chance to be more profitable. Right here, you're already through profits, right? On this, if it stays right here or goes higher, but the probability by definition
might have a sell-off
is only
on these into
that the
Friday.
that the 245 would be out.
But they don't have options, so
that he's taken a stance, or
not affect him that much.
But an opinion that he wants a more bullish trade. You can adjust these strikes. The most important learning part of this is the strategy, where you move them, how aggressive or unaggressive you want to be. That's each individual trader's choice. Randy's done a $10 spread, almost collecting, $4.50. So it's a big chunk of premium to take in, but he's in the money on his short put.
Yeah, and Randy, collecting $430 on that, you've got, as you mentioned, $570 in risk on every one of these spreads below that 235 strike on this. When you look at this type of strategy,
that's so weird.
It's a short time frame.
It sounds so wrong.
Do you start looking at ways to maybe say, okay, I can sell this neutral basically to bullish put vertical, or I could buy a call
Gamble's
vertical
running?
Where maybe if it stays here,
yeah,
I
don't
make money on it.
All of our
What
gambles.
are some of the things that you look at when looking at option
strategies
based on maybe an assumption?
Yeah, you're right. So
they're combating short sellers.
Bullish credit put spread or a bullish vertical call spread. And oftentimes you want to look at both of them and see what the relative comparison is between where your break evens are at and how much your max gain is versus your max loss.
The same space,
in some cases, you'd rather probably collect the premium up front.
I don't know what
in
gamble
other cases,
is.
you may pay out a little bit and wait to collect the
entertainment
premium
group
down the road. So it's just a trade-off
like
when you look at the
unprofitable
two.
business.
One thing I think is important to remind a lot of people is that people look at sometimes at trades and they're like, wow, why would I want to risk a larger amount of money, $570 to potentially make $430?
Pretty much.
Because you can't evaluate a trade strictly on how much could I make versus how much risk am I taking. Because if that's your strategy, then just buy lottery tickets. It's a $1 investment and you might make $1 million. What's more important is probability. Your probability of that occurring is 1 in a gazillion. Whereas in a trade like this, where it's fairly close between how much risk you're taking versus how much potential you're making, it's almost a 50-50 proposition. If I could buy a lottery ticket with a 50-50 chance of winning, well, that's a much better scenario. Sure, I'm not going to be able to, make $10 million on it, but your odds are very good. So whatever the difference is between what you're risking and what you might earn is oftentimes the inverse of the probability of one outcome versus the probability of another outcome. So it's really important to compare both of those. I've heard people say, oh, I only want to do trades where I can make 4 times as much as I'm risking. You do that and you're going to lose 3 times out of 4. That's the thing you have to always remember about these trades.
Yep. Baseball analogy. Don't be swinging for the fences. You're going to be out of the game shortly.
Rod Carew options, right? Base hits and doubles.
Tony Gwynn options.
That's
I like
right.
that. All right. Thanks to Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, helping us break down markets and Microsoft. But coming up after the break, Kevin and I are going to be joined by Landon Swan from Likefolio for discussion on Coinbase, which has rebounded on this spike in Bitcoin.
All right. Not done anything new. Sorry, I had to stave off some hunger with some cereal.
Well, I mean, I think Coinbase goes with the crypto market, right? I mean, the higher those markets, the higher the Coinbase stock is going to be. And you know what? I think I've actually found the secret to calling the tops and bottoms of the Bitcoin market. Back in November of 21, last November, a year and a half ago, a few months ago, at Thanksgiving, I was getting a lot of questions about crypto from family members who didn't know a lot about it. And that was when it was at 65,000 or whatever it was. This last Thanksgiving, nothing. Nobody said a word. So there was the top in 21 and there's the bottom in 22. So just keep your ears and eyes open for when the least investing type person starts asking about something, that's the top.
That's true.
But now I think
good indicator.
We've got a fantastic rally going on. And
so you respect big volume on
Coinbase, that's about 50%.
Both
yeah. Bitcoin and Ethereum are doing
not
really
just volume,
well
but price action.
What, 2 weeks, 3 weeks?
Yeah, I mean, we had bigger volume yesterday than today. So
on the chart, I mean, it was really low. It was down around 16,000. I actually had limit orders sitting at 15.
Not necessarily bearish, but
on Bitcoin,
maybe consolidation. You know, maybe more something like this.
As this rallies, Coinbase is
but
going to rally.
Then potentially
what happened is,
new lows or
you've
retesting of the
got
low.
a situation where in November FTX just completely collapsed.
I mean,
and
that goes against some intuition because the chart still looks bullish.
Brought into question
unless if today closes pretty red, then we'll have that RSI divergence. So just TA wise, it'll be signifying a top.
And I think that it was actually, I mean, obviously it's negative at the time for crypto, but you could make an argument that was positive.
Chop to bearish. Yeah, I mean it's more bearish. It's
the
not
most regulated, sort of the safe haven. Like if you have to keep your coins in one of these, then Coinbase is going to be the one that you're into. And you can see here in purchase intent.
But I think we're going to need the SPY to move too with it.
Towards the end of
Maybe.
October, people started getting
checking out
renewed
Cosm is
interest,
breaking out
into opening Coinbase
OSM.
accounts. As that FTX news is happening, they were looking for a place to put their money that to put their coins that was safe.
Hurt my gum last night.
I think that's probably the biggest impact that we've seen.
Water flossing.
Is they're the not exactly the last.
They're just like for some reason wanting to get really aggressive on one of my wisdom teeth.
Very good for
the back. I don't know. I was like, I'm just gonna get this thing.
Stock you can see just completely collapsed
started
over
gouging
the last
it.
few years and has had a really nice run. Right now, they're being pushed along by a lot of
Germany to send Leopard tanks to
crypto,
Ukraine.
More investing, talking even
Are those like the ones from World War II?
Trading it in general, investing into getting into the game, I think is one of the big things that's really pushing this. It's just an overall trend move. I mean, this is not that Coinbase is executing tremendously well. It's that they didn't get washed out, they didn't collapse, and more people are coming into the space.
To help Ukraine
so I think
stave off Russia.
Play well for them over the long term. And right now,
stave off.
It might seem tough to buy at these levels based on the recent move. You might feel like you're buying high, but if you zoom
supposed
out
to
on the chart,
them.
Zoom out on the chart of Bitcoin,
no, it's way worse than that. I'm sandblasting my gums.
You might think these are low prices if you look back in a few years. This might be a low price for Coinbase.
Landon, you said a couple really important things here, which is number one, Coinbase makes their profits off of transaction fees, right? And right now and they are tied just like an energy company is tied to the price of crude oil and a gold mining is tied to the price of gold futures, they're tied to the price of Bitcoin. They've rallied, Coinbase has rallied because Bitcoin and cryptocurrencies have rallied. But you also said another word, safe. People are wondering, are these investments,
the charcoal toothpaste,
are cryptocurrencies in general safe to be in? Here's the good news about something like Coinbase. They have, by definition, a pretty healthy balance sheet. They've got, as of
you mean the black container, or you just talking?
They've got $5
it's the black one that has, it's like charcoal, right?
$3.4 billion in debt.
Scrapes off enamel.
They're a healthy company.
Yeah, I don't think you're supposed to use too much of it. It's like,
unless, of course, this storm is a major hurricane that's going to wipe everything out.
That makes sense. It's scraping off enamel, though.
What is that your view?
My kids and my wife use it, but they were like, I don't think they use it that much anymore. I think it's kind of I think it's good to do maybe periodically.
Yeah, I think so. I mean, you know, I'll do the Florida analogy since I'm here, but they've got the house with the hurricane windows and the backup generator and everything. Like, they're the safest one on the block. So as long as the storm doesn't just completely take the house out, they're going to be around, and everyone's going to be looking for a place to stay. So I think that Coinbase is they benefited from FTX. In the short term, I think it was very painful for them.
But if you're trying to stave off yellow teeth and
kind of solidifies
cavities, you want to use it some.
The safer one. And you know, if you rewind a few years, people were always talking
Corner
about,
dentist?
well, Coinbase is U.S. and it's
What the
more
heck?
regulated, and I want to be off the grid and all this stuff. And you know, a lot of these people that had that mentality paid a price for being off the grid. And I, you know, I'm not a huge fan of government regulation, but in this case, Coinbase, it absolutely benefited them. And so when you look at the stock, I mean, they had a high in October of about 78, and just in 2 weeks ago they were 31, and now they're about 54. So this has been a wild ride, but they're tracking, just like you said, they're tracking Bitcoin because they take a percentage off of everything. In the future, I think that they're, you know, the fees that they charge are going to go down on a per dollar basis. It can't be, they can't continue to be as high as they are. They'll probably get to flat fees over time, but right now it's a percentage basis. So as Bitcoin goes, Coinbase goes. And they have that benefit of being the safe one. So even when we compare to, you know, like PayPal or Square, their purchase intent and their sort of earnings score, if you will, is all stronger than both of those. So I think this is the long-term winner in this space. And even though
that makes sense.
Has rallied quite a bit,
Clever.
60% or so in the last couple of weeks. I do.
And then we
think
try
that,
to come
you know,
back
3-4
because
years from
it
now,
broke. They say you
54
can't enter,
could look like a
can't
low
enter
price.
Mexico. No way,
So
man.
you used the term safe. You guys both used it. Let's not use that
You're not
term
allowed.
when talking about Bitcoin or Coinbase. In my opinion, this is just
Mine was in the form of a question. Remember, is it safe? Not it is safe. Hold on a minute. There's a big question mark at the end of mine.
But that's kind of my question. With your data
No
starting
refund.
to turn higher for Coinbase, but then you
I don't
also
know why I did
mentioned
age
the
in
other
there, but-
side where fees are going to start coming down because of that percentage that they used. Maybe more competition comes into this space. Is that the concern? And the, you know, the I guess the roller coaster ride that retail investors are at with you know, with Bitcoin. If we see Bitcoin go back below 20 grand, that'll probably wipe out some people that were getting interested in it again as it bumped off of, you know, 16,000. Is that the concern for this company, is that it's such a fickle market within Bitcoin that you're going to see those moves, those wide
Is
moves in
Microsoft?
Coinbase?
Is it tomorrow before
Yeah,
open?
I think you're going to see some really wide moves. However,
Today
I
after
think
hours.
we're on the lower end of those wide moves, and I think that they get exponential as
Today,
you get higher.
after
So
hours.
let me elaborate just a little bit. Like, let's say that, you know, Bitcoin's at
Yeah.
what, 22
Yeah.
right now. Let's say it goes down to 18 or 16 or something like that. Yeah, I think you'll see a 20% drop or so in Coinbase, and there might be a little bit less interest. Now, if we go to 50,000 or 100,000 Bitcoin over the next, you know, you pick your time frame, year or two.
Didn't
if
find
that
it called.
happens, then not only do the fees
Oh,
increase,
just the gap up on
but
it.
the user base increases.
Oh, Cosmo got
Everybody's gonna start
halted.
coming back
Oh,
in again. It's
look at
going to
that
be just
thing.
like, you know, 2018 all over again.
Well,
So I think
I'll be excited to get my
it
GME
can
capital
actually
back.
multiply
Not really.
faster on the upside of Bitcoin than
'Cause
it will
I like the
decrease on
security
the
of it.
downside. Now, if you know, if
Give me
Bitcoin
rally, but-
collapses and it gets down, you know, in
Some of
single
these
digits
moves,
as far as thousands go,
the stock market
then,
still
it's
has a
gonna
lot of
have
squeeze stuff
hugely
going on.
detrimental effect on Coinbase. So if you're thinking about investing in Coinbase, you obviously have to believe in crypto, and you have to have a good reason for doing that.
Yeah,
But
the
I
gap
do
up on
think that
BBY
if
would have been
your
nice, but
base
who
theory
could have
is
known that? I mean, we
Bitcoin
guessed
is going
it
to stay
would
above
go up today
10,000
from
for the next
OPEX,
2
but
years, 3 years plus, then I think you're betting on
I don't know.
upside being
Doesn't always happen
exponential and
for whatever
having a
reason.
multiplication
It definitely
effect
doesn't always happen
all
at
the way
pre-market.
up to whatever the price may be.
If you
So
bought anything today,
that's kind of why I like it
this
here,
is
because
literally
I think it
just
is the
data
early
farming.
leader, and
This
as
is our farm.
those fees will
We got the
increase
hills
with
and the
Bitcoin, but
valleys
so
and the
will the
hills and the
user
valleys,
base,
and they get smaller
and
and
it will just
smaller
continue to grow.
as your
It's
profits
all
get smaller and
based
smaller.
on that user base, the data here. All right, great stuff as always, Landon. Appreciate it.
All right, guys, thanks.
All right, that's Landon Swan, co-founder of Likefolio.
GME earning not till like March. We just had earnings in December. You keep asking about earnings. It's been a while. It's gonna be a
I'm
while.
selling you the picks and the shovels and the wheelbarrows.
Why has got them
right?
up? No
They're
idea.
just involved in the transaction is how they make money. It's a little bit different. And like I said, the balance sheet here is pretty comfortable. Do I know if it's going up or down? No, I do not. Tell me where Bitcoin's going. I'll tell you where Coinbase is going.
Right. Okay, so you got an example trade for us in here, Kev. As I mentioned, up 53% so far this year. So this thing's volatile.
My trade reflects exactly what I just said, Tom, and that is be prepared or try to prepare yourself for something in either direction. And what I did, I went out to the February 17th, and I bought the double calendar, February 17th, February 3rd. So, and I did right in line with the expected move here, which is about the 45 puts and the 65 calls. So about $10 in either direction, Tom. Can you get that move in this? Yes, you can. Will you? I have no idea if you will, but this is
So they don't know exactly when, but yeah.
You've got a chance.
Last year,
to
you
extend
can look at last year. It
duration on this trade 'cause
should be
it's a
around there somewhere.
2-week, calendar spread or double calendar, and you're only
Exactly,
you're
Gillard.
right now.
Exactly.
Right, as it sits right now.
Oh, it's
you're
today. It's gonna go
$1.18
crazy.
on the put, $1.20 on the call. So not a
But
big
selling it
way
open
out
is
for something that can
on
certainly move.
options is almost
So let's break this down.
not always, but
February
it's
17th. Monthly option.
just guessing. I'd say it's
45 put.
85% of the time
in 10 days,
the best time to
65
sell.
call, 45 put, double calendar.
85% of the time.
Kev,
So
your
that tells you
break-even, if you pay roughly about a 245
it's only
debit for that, your break evens, you got 4
15% of the time.
You do not want it to
the best
remain
time to
near
buy.
the current share price. So if you expect
And
volatility,
I bought
and
GME this morning
movement
because I thought
in
it might
these
be at
shares,
15%, but
this is a
turns
strategy
out it's
that
not.
takes advantage of that. The
Might still work out,
245,
but
what you pay is your risk on that. 245 bucks
selling
per
when it's
double
exciting,
calendar
buying when it's
spread.
boring.
But your break even
And
on the upside
always
you
exciting
can
the
go
first
all the way
hour.
up to 72.30, all the way down to 42.
Especially with a gap up like that, like,
you can still be profitable.
Nah,
but
doesn't
you
usually
do
just gap and
have
then keep going.
About that $5 or $6 range in
But if it
there
does,
in the
that
middle
falls
where
into
it
the
could possibly
exception, not the rule.
Be detrimental, and where you could lose a little bit, not maybe as much as what you paid for the double calendar, but a little bit.
You are long some Vega via the
I
double
don't know.
calendar.
This is CNBC, I think.
Percentile, 35%. So the lower third, right around the third on the spectrum. So
That's good advice. Prepare yourself in both directions. That way you will never be let down.
So
I like that.
Different strategy. You want it to move, right?
Hey,
over the
we're
next
just trying to stave
2.5
off
weeks,
unprofitable days.
Good look, or 3.5 weeks actually. So this is a good look at a position that plays for movement. You want it to kind of move. At
taking
least
profits
one
is
standard deviation. All right, Kev, we're going to take a quick break.
it's
then we're going to
it's
take a
a
look at
skill I've
Boeing.
not fully yet
Another high
attained.
flyer this
Acquired.
month. Reports earnings tomorrow morning. Fast Markets coming right back.
I like that wide angle shot. Just trying to stave off bad vocabulary. GNS. It's consolidating nicely. Done? No, I mean, they haven't even announced anything. They haven't done anything like that. I may or may not have would have still been holding if it wasn't for GME. Once they announce like their dividend and all that, they're gonna get a probably big move up from the announcement, and then potentially big move up before the ex-dividend date. If they're doing that, just any of the stuff they do and announce, you should get moves. It definitely could come down before then, though. But I don't know. I mean, it's held up quite well. Maybe it'll hold a higher support. Not necessarily come back down here, but hold some levels, because this was potentially quite a bit or some amount of shorts closing, and they might not get back in, or at least their legal portion of it. And who wants to short something legally? It costs money and it's a headache and takes time, paperwork, and so they might just abandon this one. Went on to limit that call. I've seen SATX before. What's it doing? 71% down. Yikes. They should contact the illegal naked short selling fighter team squad unit. Get them on the case. I was karate chopping when I said that. Yeah, GNS. It's just getting kind of choppy. I mean, it's a huge volatile range. You can day trade it or scalp it or whatever, but big momentum move up. Seems like it'll probably need to settle down first. Another 30K at the wall. See what happens. Yeah, that's when you start theta farming. How much could you make with 30K? You did this week's. We'll go conservative because if this rally doesn't happen, then it's probably gonna come down. 20 is 20 delta. That's pretty awful, but we'll just say 20 for 20 delta's sake. So 30K divided by 2K, 15 contracts, right? Times $25. You can make $375 this week doing nothing, just in the next 3 days with that capital. And guarantee a price on GME of $20 if it gets that low. Or you could go next week because that's pretty short. That's 30 delta for next week. You could do 19, keep it real safe. Wow, that would be different contracts, so. What? 26 contracts, there you go. Probably wouldn't get a fill for 50. Or $1,222 return on that 30K investment by next Friday. Once legal team improves that special dividend up until then. Yeah, that's even pretty bullish. Choppy. I feel like it'll probably come down some. COSM is resumed.
This company continues to get healthier.
All right, 1 o'clock coming up.
Healthy. I'm not sure which one, but you know.
Oh boy.
They continue to heal from all the problems, and I think remember deliveries for them means free cash flow, and cash is what they need right.
It's a win-win
right now, Tom. They're talking about free cash flow of $10 billion a year between 2025 2026. They're going to start hitting free cash flow of $10 billion. That is a company that's getting healthy. Remember the highs years ago before this stock sold off was in the mid fours. So this stock still got a long way to go. They annihilated it. Some mismanagement,
paper trading.
Some, then the economy
nice.
Hit with.
Have you done any cash secured puts?
Problems with the supply chain, things like that. So I think, listen,
clipped it, nice.
Ramping up production is really good.
Yeah, cash secured puts, man.
Is really good. Get one big mistake they made
last trade that.
Time, this fixed price
it's slow
for government contract
profitable.
They messed up
just like a farm.
On. And so they need to get that righted. But this is a company slowly but surely getting
low and steady.
Yeah, that Air Force One project that they were doing.
But safe.
Fixed cost. That's
Billions.
not good for them.
Yeah.
Defense Department
and
also. LMT,
compounding.
General Dynamics.
Yep.
They're also in that too.
Put all your capital, put it back into more cash secured puts.
Planes in December, up
start looking at compounding interest calculators. Things get insane.
60%
you just have to
have
the capital and the patience.
Slowdown that we saw at the end of 2021.
Good risk management.
I wanted to look at this.
Good discipline.
Option market's pricing at about $8.20 move either way.
Look at this.
In these
look at this
shares.
website.
I think there might be some resistance at that 52-week high, which is about 223 or so.
Well, we'll say
so
no monthly contribution.
Takes advantage
5
of a
years.
move higher, but you're limiting what your cost base is on this, Kev.
Yeah, 90%. I mean, yeah, 100% a year. But you realistically on GME with Ivy staying high, you could do about 50% pretty easily.
210 calls, selling 2
which
of
seems
the
crazy,
220
but
calls, buying 1, the 222
5 years,
and a half strike
$40 million.
call. You're paying a debit of roughly $310. You see your break even there. a 213.10 to the upside. Now, you want it to go up towards that 220 mark, which is that 1 standard deviation move. Kevin, your thoughts on an unbalanced butterfly, lower cost entry point to maybe a vertical, but you've got all
bad or
upside
good?
above that
It
break
doesn't
even.
matter. I mean, you'd roll before you get assigned if you don't want the shares.
Wide on the long call vertical, 2.5 on the short call vertical,
Clicking
325
the
is what
goes
you have
on
at
off.
risk right now. Tom, this is a bullish play, about 25.5 deltas.
Yeah,
I like all the
on
plays
this
they share on
one,
here.
You can
Gives-
see the
gives
apex
good
of that
ideas.
profitability up near that
I mean, the
220 strike,
options,
which would be right around
options
that
trade they
1
do are
standard
pretty
deviation
complex. I'm
move.
like,
But
slow down,
you're looking for
professor.
upside. Now, if you wanted to do something more bearish, you can look at it the
Or is that what it was? It
other side,
worsens
where if you
patience?
buy
Yeah, I saw
a
something about
put,
mid
unbalanced
trial.
put, butterfly
They
to
got
the
their results.
downside. If you think that, hey, this stock is
kinda
getting
going the wrong
close to
direction.
overbought levels on an RSI, it's run up extremely.
Yeah, someone's asking me about support on
hard over the
Sava.
last several months, but they've got the orders to back it up. There's a lower cost
I was
entry
like, well,
point
you're
to
kind
take
of at
that
it.
bullish stance on
So
it,
might bounce
and
there.
staying risk defying into that
Pretty bad news, though.
that release tomorrow morning. Only 3 days in that trade, so a real short-term look at Boeing and an example trade in there. All right, that's going to do it for Kevin and
Jeez,
I
come
today
on,
here on
Jamie.
Fast Market.
This is the
Stick
time.
around.
This is
Stick around right here on the
this is
TD
your
Trade
moment.
Network. Next Gen Investing is coming up next.
$38 likes, you legends. Thank you. Yeah, I like their option plays too. They're just so complex. I'm like, what the heck? How many legs? But no, they have pretty good TA, and it's pretty easy to follow, and probably hits pretty good, really. But then yeah, then they're complex options. I'm like, dude, who's following these trades? That's watching CNBC for trade ideas. $40. Thank you guys. Cosm coming down a bit. Cosmo. Oh yeah, we were watching this one the other day. I think when I was doing this. It's Cosmo Kramer stock. Carrying a calendar while chasing a butterfly. Yeah. Yeah, they don't talk about legging in and out. I think they just imagine people close. I don't know. But yeah, some of them are so complex. It's like, what the heck? Round's going? Yeah, risk mitigation. Yeah, they have a lot. They're good. Yeah, breaking out up to VWAP. But yeah, moving on up. This is that island pattern. Did want some exposure on this. GME, the clock is ticking. You better start making moves. I'm pulling the plug. I'm doing it. 290 average. Well done. Nice. Right about VWAP's not a bad spot. This will probably, given that this island pattern has been created over the course of weeks, really a month, this to play out could, this could be a month. Might not just happen in a day or two. But the longer the time frame the pattern is showing, the longer it's going to take to, really see the fruit of it. So you're going to see gap up and then probably move back up here to the 5.3, and then probably another gap up here. But that could take some time for sure. Yeah, it's probably on its way back up to here, that like 10 range even. So yeah, cheers. Next time you need to write something of value. For the first time. No, come on. They're fine. There was an option chain on Grom? Dude. Weeble. Now it's starting to break out above VWAP. It's not even showing up on Weeble. Why are people bullish? I don't know. I guess because it moved up a lot. What's this thing even do? Social enterprise? Prestige worldwide? Delivering content to children under the age of 13? What kind of pedophile company is this? Grom Social? I mean, I like the name, of course. Social media, entertainment, technology. That's cool. Yeah, it's just like a more wholesome media company. Social media. That ain't bad. That's how you win, dude. That's how you win, man. They're probably not really making much money. Probably just losing money, so being a publicly traded company, it's just a big money grab, more or less. Yep, just suck liquidity. And piggy bank off of investors with a little reverse split here, which is always a great catalyst for bullish price action somehow. 1 for 30. That was a massive split. Yeah, you gotta be careful with that one. I mean, that little island pattern could work out, but I'd probably have stop losses or some kind of exit plan. Hansen? Who the heck is Chris Hansen? Freaking journalist. Is that the voice I just did? Buy's moving up here. Just so choppy today. Mr. Grom. Yeah, there's your 30 grand at the wall. Yeah, stop loss thing, I'm using them more.
Starting with Microsoft, this is almost more of a drawing of awareness to the company. It's not really moving, but the anticipation is that there is a possibility for kind of substantial movement potentially when we get this result.
Oh, you've traded this
one,
huh? I'm down.
Just to Microsoft.
Is the float that small?
Of the weight
wow.
that this company carries.
Wait,
from
did
a
I
market
trade this
cap
IPO?
standpoint. You can almost just watch the NASDAQ futures after the close, and the direction that they start swinging give you a pretty good indication of what happened in the Microsoft.
That is a tiny float.
Right, and I think this will also be indicative of some of these other tech titan earnings we'll be getting now.
eBet moving too?
Microsoft is the first of these big mega cap
That's
names
crazy. I looked at eBet earlier because of that other one that was going.
Slowest sales growth in more than 6 years.
What was the other one? That other
been battling slowing PC
gaming
sales
one
compared to what we saw during
Someone
the
said
pandemic.
some gaming one that I've never heard of.
Obviously buying a ton of desktops and at-home software. Everything from work from home as well as, video games were also a huge plus for their business. Revenue is expected to slow to less than 3%.
No, it wasn't Endgame or
Net income is
SLGG.
expected to fall
Just some
more than
like it was like
8%.
gaming,
Now,
entertainment,
according
something.
to a research firm Gartner, worldwide PC
Look on here.
shipments did decline
Recently
about
viewed.
28.5%
Probably in here.
previously in the
it?
quarter. Collectively, not just for Microsoft specifically, but this is expected to be a headwind when they do report their second quarter. Now, they did announce last Wednesday laying off about 10,000 of their
Then I
employees
immediately
as an
checked
effort
eBay to see if I was
to
getting
cut
sympathy on
costs.
it.
This impacts about
But it wasn't that
4.5%
time.
of their
I don't
overall
see it on here.
workforce. The company did also previously announce layoffs of about 1,000 jobs in October. So any guidance from this company, I think, will be very critical on how they
Oh,
plan
Meta, that was
to
it.
deal with these cost restructuring,
playing.
deal with a lot of the
Yeah, I don't see it on
that
here.
face this company. And really, since they are the first name to report, I do think they take center
Bye, back down to
stage
VWAP,
today after the
bouncing.
close, Alex.
Yeah, and I don't want to kind of beat the dead horse here. We talked
Hey,
about this
CDB,
one
what's
for
up, man?
FOMO on Friday, and
Good
for the sake of
afternoon.
kind of switching things up here, I'm going to say
Oh,
down
nat gas
vote,
flushing.
but, we can have the whole show on this. I mean, this is the story of the day when we get this news. I'm sure Oliver and the team will be all over it when the news breaks. Watch the NASDAQ futures, as I said. To set the expectation for a reaction standpoint, the market itself is pricing in based off real-time option prices.
US
doing
set
some
to provide
math,
Ukraine
on
M1
the platform
Abrams
using
battle
the
tanks.
market maker move calculation, about 4.5%.
Gosh.
Kind of set a baseline. It's not going to be a limit to that. And it's not even saying that that's the most likely outcome.
So Russia's
Just
sending
saying
their
this is what the
Leopards.
market's
We're sending our
pricing in,
Abrams.
one standard deviation either direction. So I think that's interesting looking at it. But as I said, for the
To go
sake of
defend
giving
Ukraine's
I
border.
guess the viewers a break from Microsoft, I'm going to say downvote.
I know I have been talking Microsoft quite frequently ahead of this report, but our next name today, Lululemon. Lululemon on some not so positive news. Downgraded
Weird.
today from
Ron
Bernstein
had
to
calls.
underperform from market perform
Strange.
with a reduced price target to $290.
I was wondering if
down from
you can take your stock
$340 and now
off of
below where we're currently
the options
trading just
market.
below $310
Up and
a
down,
share.
or are you able to do
Analysts
that?
said after delivering 25% sales growth and 30% earnings growth for 5 straight years, Lululemon has a reset coming. The firm said that with no more pent-up demand, a more cautious consumer outlook, and negative margin mix shifts, the company's earnings growth will decelerate materially. And they expect the stock's multiple to follow, a name that has not caught a bid at all this year, though still down about 3% this year, down about 24% off its yearly high, although up 23% from its low. So a relatively quiet to slightly negative year thus far for Lululemon, who doesn't report what feels like forever from now, Alex. Not until the end of March are their fourth quarter results due.
Yeah, and we're used to getting Lulu's numbers later in the quarter, so that's no surprise. But for the first time, at least that I can recall, I mean, this is an analyst, and it's just one analyst opinion, of course, so we got to make sure that we throw in that caveat. But kind of sounding the alarms here a little bit at Lulu. And I know sounding the alarms at a company that's been, firing on all cylinders like this one is just saying that the sales growth just isn't going to be as fast as it was, but it's still pretty interesting. We'll see how it can kind of take this news, these kind of worries in stride or not. And maybe the technical picture from Rick can help settle that score a little bit, because I'm going to say upvote for this. Kind of uncharted territory for a company that's done as well as Lulu over the years to really have analysts really highlighting this for a negative reason.
I know. I was shocked to read this report today too, and I was also fairly upset to hear that we could see some negativity coming in a name that hasn't exactly had a strong last couple of months. But our next name today is, I believe, our steepest loser of the day. That is 3M. After posting their fourth quarter results this morning, shares are down almost 5.5%, which is a little bit off actually their intraday low at these levels. But they did report worse than expected adjusted earnings on declining sales year over year, although their sales figure did exceed the street's forecasts. They issued 2023 adjusted earnings guidance below consensus and expect sales to drop between 2 and 6% this year, due in part to an unfavorable Forex impact between 1 and 2% per the company. Now, along with this outlook, they're facing lawsuits over potentially faulty earplugs that are sold to the military and facing cleanup and legal liabilities from chemicals made by the company that potentially tainted water supplies. Not headwinds you want to see from this industrial company. But the chairman and CEO said in their earnings release they will cut about 2,500 manufacturing jobs, which he said is a necessary decision to align with adjusted production volumes. This really signals some weakness outside of tech. We've heard so many names. I mean, Meta, Amazon, Salesforce, Spotify yesterday that are reducing their workforce, but this name now, an industrial player, obviously, also feeling some of that heat and restructuring accordingly.
Yeah, and I think that there isn't necessarily more credence to that, but there's a feeling that some of these industrial names, these longer standing names, these names that are Dow Jones Industrial 30 names, that they're a little bit more cyclical. They have maybe more of a kind of a correlation to the economic cycle. And so for these type of companies to be taking these type of actions, I think does maybe increase that uncertainty and that feeling of uneasiness maybe about the economic picture, but that feeling's already there. And so you look at this is obviously 3M specific, but it's along the lines of many other decisions being made by many other companies. But this is the move in reaction to earnings. So for that reason, I'll say downvote, just since the news was sort of in the rear view, but certainly another one to circle on the day. One of the stories of the day, we'll see if it can be upstaged or downstage, I guess, by a company like Microsoft. But for now, it's sort of sitting in this and stewing in this unfortunate kind of earnings release, and we'll see if a name like Microsoft can overshadow it.
Or a name like Boeing. Boeing does report tomorrow morning, and I have to say that Boeing, what a comeback story it has been. Although they are down about 5.5% from their yearly highs, this name has risen a whopping 86% from its yearly lows, and now up about 10.5% year to date. Now, they do report tomorrow, like I said, and their top line is forecasted to have grown by 37% on a year-over-year basis. Orders for new jets picked up steam in the back half of this year, as we did discuss pretty thoroughly their deal with United, which broke all sorts of records for both companies. Question remains if Boeing can fill these big orders. Now, they are expecting an improvement in their defense, space, and security segment thanks to higher deliveries of their defense products, and they've witnessed pretty strong global demand for its major combat programs, translating into an overall order value of about $5 billion in the previous quarter, which the street is expecting to remain a bright spot in this fourth quarter. However, a huge asterisk here is estimated manufacturing and supply chain costs, as well as charges on fixed price development programs, could be seen as a negative. Obviously, we'll get more clarity when they do disclose their fourth quarter numbers, but what a chart Boeing has had over the last several months, Alex. I just think its rebound has been astounding. Now we'll have to see, obviously, if that can hold once they disclose their updated financials.
Yeah, and I think that this is almost a 4 or 5 year story going all the way back to the 737 MAX, obviously COVID. We've talked about that many times. I mean, you're trying to explain macro, micro, and how that can impact things. I mean, Boeing is the case study that you can use in recent times to illustrate both and how they can work together to work against the company. Arguably, if Boeing wasn't operating in a space where it's really one of two major players, there could have been an argument that maybe a company like Boeing, even with its stature and
GME,
size and long-standing,
it's gonna happen.
Maybe it wouldn't have made it through those kind of hurdles. But it's hard not to envision clearer skies ahead. Just simply
might need a catalyst. Might need Microsoft earnings
in recent years. That being said,
in
it's
a
almost
pre-market.
like a Netflix-like recovery. 440-ish, 450-ish was about the all-time high that we had about 4 years ago before all of those hurdles that I talked about. We've climbed about halfway back up that mountain. So again, talking about kind of the slow, steady grind that it
Growing
can
at
take.
317,
This looks like a
616
really, really
to
impressive
maybe
comeback
there's
over the
volume.
last 6 months, but it puts in perspective
Weird.
just how much damage
Yeah, I can't
was
get
done
options
to
on
this
Grom.
company. It's only halfway back to where it was. It's got a long, long ways to go.
I know. I'm wondering if a
another name
company
reporting
doesn't decide, but I'm wondering if a
one that
company
has
can
had positive sentiment around it lately. So for that reason, I'm going to say upvote because you watch Boeing, if it's able
retract
to
their stock
continue
from
to
being
build
able to
on the
be
success,
traded
much
on the
like
options
Netflix
market.
has a little bit so far,
I mean, similar to how,
you
you know,
need if you're gonna
a
see
stock
an
would
overall market
come off the
recovery.
DTCC
Yeah, that's a
or
really
whatever.
good point, especially considering that low bar that was set
still be
after they
publicly
dealt
traded,
with
it's
their
not
fair share of
on there.
non-pandemic related
Seems like you should be
headwinds.
able
Obviously,
to
this company had a lot of negative
retract it
news
from
and pieces of their
being
company
a part
they
of
needed
the
to
options
sort
market.
through and work on, which it does feel like there's taking a step in
I
the
don't know.
positive
I just thought about
direction,
GME.
but we'll be discussing both
If they
Boeing
did
as well
that,
as Lululemon coming
that
up.
would maybe
We'll
help a
dive into the
bunch.
technicals, as well as looking
Or
at
any of
some
these
example
shorted stocks, like
trades
maybe that's one of the
coming up next
things.
with the Next Gen Investing.
But it's probably not an easy thing to do if you can't even do it. I didn't see that on the battle plan. fighting crime and naked short sellers 10 steps to winning plan. But I don't know. I mean, they've got to know that when Wes has talked about it, I haven't heard him talk a whole lot about options and how options are used. So I'm assuming they know way more than any of us about it. But it is interesting. I haven't heard him talk about how they use options to suppress the price. So I wonder what their thought would be. You just got rid of the options, because we've seen it like with stocks that move. If they don't have options, it's just way more organic, it seems like. You've seen options like that before? Jeez. Yeah, they're probably pretty liquid. Yeah, maybe on E-Trade. I can check E-Trade. What was it, Grom that didn't have options? I mean, Weeble's limited on stuff anyways. No, no, there's no options on Grom on E-Trade either, which that should have it covered. It's gonna be on any platform. It's almost always on E-Trade. I'm curious. So I can do it on Fidelity. No, I can't do it on Fidelity. TD. See.
$5 window where things can get a little bit more, I guess, a little bit more in the weeds, or it could be a little more theoretical at that point. But for the most part, $5 window, $310 stock, you kind of know it's going to be either max loss, max gain. But of course, this is the bearish outlook, customized to something more bullish, or of course into a different. This strategy could be applied to a different name as well, just using Lulu in this particular case for the trade illustration.
Right, and a pretty straightforward example trade today. But now to shift gears here to look at a Boeing that is, I'm sure, faring quite differently from a technical basis. Although, Rick, I mentioned they're up about 86% off of their yearly lows, but we have seen right now this rally start to fade a little bit, which sounds ridiculous considering they are still up today about 0.4%, but we've given up about $6 from the high we once saw around 216, now trading just over 210 a share.
Well, to your point, I would say the decision that traders have to make in this name is the rally starting to reverse or just kind of slow down to the sideways here? That's a difficult thing to answer because we've had some very strong upward price action here. Since we were at these lows, we're up about 75% after the rally began in late September. We've seen a period of higher lows since that point. Very sharp increase, then a more gradual upward channel, then another sharp increase that looked like we were going to break out of that channel boundary here. However, we did fall back within it, so it's still in play right now, even though we are flirting with the upper edge of it, very close to perhaps breaking out one more time here. But we've already got quite a large candle today. There's no reason it couldn't keep going, but we are near this resistance boundary here, right around the 210 level here. To the upside beyond that, the old highs, the yearly highs, this red dashed line near 220, that's a point that many traders likely will be watching for some potential resistance around there. To the downside, the 203 level represents our yellow 21-day exponential moving average. It's right in the middle of that channel. So that seems like that could be a place for this stock to find some support. Looking at the RSI as well, we can see that we did get a little bit of bearish divergence in this name. And by that I mean price was making new closing highs, RSI was actually trending downward. So the momentum was indicating a slowdown. Once again, does it mean that this is going to be the start of giving back some of these gains and reversing even after we are up such a hefty percentage? Or does it mean simply that we're just going to trend sideways for a little bit and gear up for another leg upward? Definitely an interesting chart to consider here.
Yeah, Rick, and I think that's really critical, especially ahead of their earnings tomorrow morning, as it does feel like, at least over the last several quarters, that companies that are faring well oftentimes get punished because the bar is just too high. Obviously, that's not always the case, but right now Boeing has seen a good deal of strength, so I do think it will be interesting to see how this moves, given the fact that you said RSI slowing, momentum starting to wane here, some factors to consider ahead of this earnings event. But we'll leave it there. Appreciate all of the technical insight, as always, Rick Ducat, our chart master for the day. So then, Alex, when considering this name, I think you have to be sort of cautiously optimistic into this earnings event, given its recent strength, although we've given up some of those gains. Looking at perhaps today maybe a neutral to bullish example trade.
Yeah, and I think a lot of investors maybe kind of echo that sentiment. Maybe the confidence is starting to build up, but there is that feeling of uneasiness because of the run-up in the name. And so say you're leaning bullish, but you want to give yourself a little bit of room in the event that there is some sort of a setback here or disappointment. Market maker move targeting about a 4% move, or about $8.50. Well, at a stock trading at about 211, just under 211, that 8.5 will target around that 203 or so level as well, maybe just below that. So corresponding with some of those support levels that Rick had highlighted. Well, if you're selling out of the money premium, you're leaning neutral to bullish, well, you'd want to be below the support. And so the next level below that was around the 200 strike. Also a big round number. Some investors feel comfortable going to those big round numbers as well. Selling the 200, 197.5 put vertical in the February expiration. By going to the February monthlies, we reduce that binary aspect of, hey, the earnings are out. This is either going to kind of work out this week or not. It gives us a little bit more flexibility, a little bit more duration for things to potentially go our way, even if initially they do not. So 50 cents on the $2.5 wide spread would be 1/5 the width of the strikes, or 20%. So 4-to-1 risk-reward ratio, in which the total risk is $200. Total max reward would be $50, not including the transaction cost. Break even below 200 at 199.50. You got those support levels that Rick had highlighted. If those were to hold, you can actually have a situation where the stock went lower, you were neutral to bullish, and this one could still be max profit. So I think that's always interesting whenever you can be sort of wrong, but still be fully right.
Yeah, multi-directionally correct here is, I think, a good way to go into an earnings event. But also important to keep in mind for both of our example trades today that multiple legs can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time for one of the biggest earnings events of the week. That is Tesla, expecting to report tomorrow after the close. We'll dive into what analysts expect, what the stock's been doing, coming up next.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how
Then obviously Peloton at this point in time. Now we are seeing the stock down about 4.5% in this session right now, but it is a story that we've seen, a boom bust, but you have seen a nice little rip to the upside here year to date so far, but they do believe that this might be a little bit overdone when it comes to the stock.
Yeah, and it almost seems because of that shift in sentiment, shift in maybe where fitness goals are going. I mean, this is a very niche stock. I mean, it's very cardio oriented. I know that the app has some other stuff that you can do beyond the bike, but it really starts with the fitness bike and getting into that kind of Peloton Plus or whatever it might be called on the software front and the data collection and all of that. So there's reasons that people might be interested in this one long term, but maybe if they're going to exist as on their own still, maybe they got to find gyms to partner with. Maybe they got to find big apartment buildings and hotel chains more so than they're already doing, because if you didn't buy a Peloton bike already, why would you suddenly be buying it now? I mean, even the people who like them, I think, use them more for coat hangers than they actually use these things.
Yeah, I mean, it is a strategy that they are trying to focus on, especially when it comes to the hotel space. They are trying to expand that area of the marketplace. They are also working in partnership with some of the bigger retailers out there as well to try to get their products to market. But what comes with that is also a lower profit margin for the business, so that in turn actually has to have them basically sell more bikes in order to make up for that loss in profit margins. I completely agree with you as well. When you're talking about the gym segment of the business as well, I mean, that could be an interesting niche, Alex, but then you also have to ask a gym, is it actually really worth it for them, for somebody to work out on cardio for 30 minutes, 40 minutes and have that type of Peloton experience when, you know, when I go to the gym, I can watch TV and still work out at the same time here, and probably at a lot lower cost for that equipment than going to a name brand like Peloton.
In many ways, Kev, as we kind of say goodbye here, though, the bike is just your way in. It's sort of the iPhone, and then they want to sell you on the apps. They want to get you in there, and they want to, you know, monetize you after the fact through the services element. So obviously, that's ultimately the end goal. I mean, you can just give these bikes to all the apartment buildings and just have all the residents sign up, or as many as you can. I mean, that's the strategy, but can they make that work? For a struggling company, only time will tell. Maybe a bigger company will come in here, nab them up, and sort of play the saving grace here, because the data collection is unreal. I mean, they got to have so much on the habits and the workout stuff that somebody are doing. So we'll see where this goes. Certainly an interesting one that got a lot of attention, not so much anymore, but maybe one to watch here, as it's had a pretty scorching hot start to the new year. Kevin Green, always a pleasure. Senior markets correspondent for the TD Ameritrade Network. All right, let's shift gears. Tesla. It's time for the big name, the big conversation here, Jenny. FOMO. We're jumping the gun a little bit, but we want to make sure that you know, everyone's prepared for this. There's going to be tons of Tesla coverage tomorrow. We want to be first.
And there's probably never been a better time to discuss Tesla ahead of this fourth quarter report. They have seen actually a pretty decent run up, as shares are up about 8% week to date. Also
GME.
now up for the year about 18%.
On that candle, I was like, I'm closing my options. This is stupid.
Yearly lows
I
at
didn't
about
know.
101.8 a share. So all things considered, despite the fact that we've obviously seen shares falter about 65% from their yearly highs, this name has been in a relatively steady uptrend. I know slightly lower today, but gearing up for these fourth quarter results, I think that analysts are really looking for any steps to recovery here. Analysts on average,
Yeah, we're trading HLBZ.
their non-GAAP
There's definitely some people in it.
113 to share for the fourth quarter.
It's like some profit taking that's happening.
Year-over-year increase. Although I have to say that over
Look
the
for
last 90
support,
days, that
like that
consensus
36.58.
estimate has been lowered
That previous high.
From
Kind of bounced here before.
Now, they've also pretty consistently
RSI will
beaten
cool
their
down
earnings
nicely if it gets on there
estimate
too.
in each of the 4 preceding quarters. Street is estimating
Daily,
revenue of just over
maybe.
$24 billion, also up 36% year-over-year. So this company is still growing at a pretty hefty amount on a year-over-year basis, although is expected to slow when last quarter
This is crazy, man.
56% top line growth
Let's see
on
it.
a year-over-year basis. So it feels like
Oh, we got the
Street
decreasing
has
volume.
gotten
We have the little
greedy with some of
pullback.
their growth metrics, and we did already get their fourth quarter delivery numbers in January, coming in around 405 units, marking 31% growth again year-over-year and 18% sequential growth. However, at its full year deliveries totaling 1.3 million.
Oh, I never got back into the
40%
IRA
increase
shares.
for the year. This does trail the
I wanna
company's
day trade 'em.
long-term guidance, which calls for 50% annual growth. So maybe Tesla is actually putting this high expectation on itself, giving that guidance. At the beginning of this year, Tesla did disclose these pretty sizable price cuts to some of its baseline models, the Model 3 and the Model Y, slashing prices almost 20% for some of its models. Now we actually saw the fact that its Model Y, its best-selling vehicle, has actually had a small price increase by about $500. So perhaps things are starting to normalize. That's at least what the bulls would hope for here, Alex, but this will clearly be a volatile event. There is no stock that I believe that the bears and bulls are more divided. There are outlandish price targets to the upside as well as to the downside. So it feels like this name is a bit of a
calls open up
rogue
50%
player
on them?
as far as earnings. But perhaps
50% is
an upside that we
a
already
commonplace
do
for
have those fourth quarter
data
deliveries.
farmers to take profit,
No
either
doubt.
roll
When you look
or
at
just
this one,
close.
40% off its lows already, Jenny.
The first 50%
basically
of the
cut into
contract
thirds, so down
expires
65%, about
or decays
$11
much
market
faster
maker
than the
move.
second
Looking at
half.
pretty straightforward trade strategy for this one, much more binary.
And it just continues to
much like
slow
what
down.
Kevin Hanks would look at
80%,
on
like
that
50% is
fast
one
market,
one
week over
cutoff,
week
and then
call
80%
spread,
is
looking to
another
buy
cutoff
the
that's
call
pretty
counter
common, like
spread,
70
sell
to
this
80%.
week's
Because to
expiration,
get the last
buy next
20%
week's
decay
to
is
155
takes a lot of
strike for
movement. It's just
about
not worth the risk.
$1.75
I don't even know what stock you're
That would
talking
be
about, but
$175 in risk, not accounting for the transaction
yeah, if you're
fees.
combining TA with it,
Bullish in
then you
its
could of
trade
course
construction,
push it further. But
risk profile, the apex at the strike. So
if it goes
easy to
against the
customize
calls
for
and
this
goes
one, very
down,
short
then yeah, it'll
duration.
decay faster.
Going to
But
feel the pain in the event that this doesn't
sometimes
move towards those
just a
strikes.
flat move
So,
and won't decay that fast
make
at
sure
all.
if you're looking at this type of,
But one only GME.
strategy, you know that the earning event
Yeah,
is
I
gonna
almost
have
did
a
cover calls
huge
today, but I just
impact
couldn't
on the
do it.
likelihood of its
Yeah, I
profitability.
mean,
And also,
I don't know what you plan on
the
when you opened
assessment
it,
of
but
where it will ultimately end up is going to be paramount in
yeah,
this one. As you only got
if I
2
had cover
weeks for
calls
this to
that
work
expired
out.
this week, I would
Right,
probably
and
take profits on
obviously
them
this name has
at
a ton of
50%.
volatility, a ton of liquidity
Or
around
just an
this
intraday
earnings
scalp.
event, so all eyes
I
will
would
definitely be on
call
Tesla
that a
again
certain
tomorrow
win.
ahead of their earnings. Their earnings call is expected at 5:30 p.m. Eastern time as well. But that does it for our FOMO segment today. Now coming up next, we will preview Texas Instruments ahead of their fourth quarter earnings, which are expected today after the closing bell. Shares are down about 1%. We'll dive into those numbers more with Caroline Woods coming up next.
Yeah, that's definitely a win. 50%. I mean, you got lucky that we didn't just get like a move up to like 23, 24 after you opened it and then consolidate up there. Or especially kept ripping, but it very likely could have just moved up a little bit, pumped the IV, and you would have stayed negative on them all day. That happened to me on BBBY the other day. I ended up holding them overnight. What day was that? It was this day. I opened them up. We just pumped. It just held up. I wasn't able to get them until the next day, like towards the end of the day. But I don't know. It's seeming like it's not going to happen. But if you have 50% and they don't expire till Friday, I would probably close them and just pick up more at market open. You know, with the morning volatility, if you're going to spike up. Today's not over. Like, we still could have a big move up today, but even if we don't, like, I would probably close and reset tomorrow. Remember, buy when it's boring and sell when it's exciting. Very boring right now. This is when you buy. So this goes the same with closing covered calls because you're buying to close them. SPY finally breaking out, doing something. Is it legit? Rolling the dice a little bit. I'm going with okay. This is a proper real breakout. I don't know why. 140. Any news? A little early, a little quick, a little hasty. That's okay. Front running it. Waiting for it all day, chopping through here, in and out, in and out. Thankfully, I haven't lost too much money with all this chop. So this is good. This is good for the bull case on GME. So if I'm doing TA or watching GME for entries and exits, I'm watching SPY too. So if I start seeing this, I'm thinking, okay, GME might be about to start going. Sometimes it's a lagger, sometimes it's even a leader. Crazy, like when GME gets to those crazy highs and you think the market might be getting close to a top. Yeah, and then you see a halt. Boom. We'll see those. This could be a little false break. Too legit to quit. That's right. Kills the kills. False? Nah. Come on. If it is, should reject it pretty big. Almost 2. BIAF held up really nice above VWAP there. Cosm as well. BBBY back at that support, not feeling any of this market move up at all. Flipped bullish on the hourly. We do have an inverted head and shoulders here. All good things. Circular motion, up and down, carousel, and a circle, and a motion. All good things. All good things. That's it, SPY.
And also the fact that they are one of the first chip names throughout the sector to report. But
a lot of
here's
5
to tell us
calls
more
today.
What we can expect from Texas Instruments. I'd like to welcome
BBY.
in Caroline Wood, senior markets correspondent for the network. So Caroline, what can we expect here? Perhaps some optimism after what was a brutal 2022 for Texas
A lot of
Instruments.
3.5 calls traded.
Yeah, as Alex said, semiconductors were certainly
I'm
out of favor in 2022, but we've seen a lot of money going into this space so far in 2023. The overall sector up about 15% so far.
6.3 earthquake strikes Santiago del Estero in Argentina.
So far in the month, and kicking off 2023 with some impressive gains, and it already had actually been outperforming the broader industry.
All at the same time?
It's essentially flat over the past year. So
Oh yeah, there was a call sweep. That's right. JH shared that. Is that you?
Earnings, in terms of what Wall Street
Someone from
expects,
Discord shared
EPS of
call sweep on BBY.
$1.96. That would be quite a bit lower than the year-ago period on revenue of
Climb.
$0.59 billion, which would also represent a decline.
Giddy up.
What we want to know is, of course, what supply and demand
Borrow
are
fees
like.
coming
We've
down
seen
on
a big
GME,
drop-off in
but also the
electronics
shares.
purchases. The company had already warned that it was seeing
Just
weakness
marginal
in
still.
personal
19.7.
Is that continuing?
80,000.
Nearing a bottom.
But that's a
Also
big drop from the million they had
the company
yesterday.
said that weakness in
Not-
personal electronics was beginning to
Not that big, I guess,
broaden
but
into the industrial market.
something.
Meanwhile, the automotive market was remaining strong. So we'll get an update there, both in terms of how that played out in Q4, but also as they look ahead to the current quarter in Q1, and we'll hear what they say about the outlook. There's also going to be some leadership changes. We learned about those last week. Recently announced a CEO transition. The COO will be taking over in April.
Yellen advises Congress that her department is deploying additional accounting maneuver to avert breaching the federal debt limit. She's doing maneuvers over there, man. She's maneuvering stuff to stave off debt
When you
limits.
look at this particular name,
Thank
and
you
you're trying
guys
to
for your
assess this,
40
oftentimes
likes.
We'll go to the analysts. We'll see what they have to say. You talked about its resiliency. I mean, a flat line. I know it's choppy. Almost looks like an EKG over the last year. But to end up where you started, given all the weakness
Appreciate
in so
it.
many of
40
its
of 'em.
peers,
Thanks, guys.
particularly those on the growthier side,
Oh.
are analysts still confident then that there can be outperformance in this name, or has that outperformance limited the upside from their standpoint?
Well, Alex, we have seen a few price target hikes just yesterday. Truist boosted to 177 from 158, and Barclays bumped to 165
moving up here.
from 150. However, both are in the
Not
hold.
false.
Equal weight.
40184
Those price targets are actually a little bit
on the
below
menu.
where it's currently trading, around 176, 177. So the median
Erasing this
has increased.
divergence.
It's now 175, about
Needs some
$10 higher than
steam.
where it was.
Oh, it's already
last
there,
month.
actually.
But it's,
That's good enough for me.
You know, $1 or $2 lower than where it currently is. So not exactly a ton of confidence. I will say, though, I was actually looking at the breakdown. There are some more bullish calls on the street. I saw Rosenblatt. It was the most bullish that I could find. A $230 price target. KeyBank's at $210.
GME's not feeling
Jefferies is
this
at
at all.
$204. Atlantic Equities is at $200. So there certainly are some more bullish price targets on the street. But the majority of analysts right now
This
are
girl-
in the
this
hold
girl hangs out on the
for
streets a
Texas
lot.
Instruments. When you look at the breakdown, there are 20 hold ratings versus 11 buys and 2 sells. So I guess I would say they're a bit more cautious given the fact that this has been an outperformer. Obviously, it got a nice bump last year from the CHIPS Act, and you know, flat was
pretty good, comparatively speaking, especially compared to the broader industry.
Yeah, Caroline, I was seeing that also, down only about 7.5% from its yearly highs, which puts it, far ahead of some of its peers. And it definitely does feel like sentiment throughout the chip space is definitely different to kick off 2023 than it was back in 2022. So hold rating or more
Still have your cover calls,
does feel
Bungie?
appropriate now, but we'll leave it there. Appreciate all of your thoughts. Caroline Woods, senior markets correspondent for the network. Now, coming up next, we will end the show on a bright spot, looking at Lyft, which is up over 1% on the day after a KeyBank analyst. We'll dive more into that report with George Tillis coming up next.
Nice. Well played. Good risk management. Profits are good. Yeah, that's a good way to do it, honestly. If GME doesn't have a big move up today, I'll be doing the cover calls tomorrow. Most likely as well. And you can just scalp them. Yeah, every day. Grab 50%. That's awesome. Sell in that morning hype. You gotta have a plan if it goes against you. You gonna buy to close for a loss, or will you just commit to rolling? Especially at these lower levels. I said I was never gonna do cover calls if it was below 25. After having to roll through some of this stuff. I don't remember where it was, but now, since I've said that though, broken this 19 support, so that rule's kind of changed in my mind. But yeah, you don't want to go chasing it. Back in January when I played AMC, yeah, I did cover calls and it rallied and I ended up buying to close them for a loss, and then that's when the rally ended, and then the stock came down, and then maybe even opened it back up. It's just a bad whipsaw effect. I'm not sure if I want to do stop limit yet. This is kind of a false break. Seeming like it. Maybe with that wick up there, I don't know. Really waiting on Microsoft. I don't know if I want to hold through earnings. So,
The everyday, like, urban consumer, I would say.
And I could tell you absolutely why Lyft is down 65% from their highs and underperforming Uber, and it's because it's expensive. It's always, I don't know about you, Alex, my Lyfts are always like double the cost of Uber. I don't know how they are operating this way, but we are talking about them from an optimistic standpoint today because KeyBank did upgrade the shares. So my own feelings aside now, I'd like to welcome in George Tillis, senior markets correspondent for the network. So George, there was a lot of good to be had within this analyst note. I feel a little bit differently. The stock feels a little bit differently, although we are seeing a nice lift today.
A nice lift today.
Good one.
I think this is an interesting situation for a company that competes with a bigger brother Uber, which actually has more of a consumer-facing food delivery business and more of a logistics and transport business. I think Lyft has some potential here, and this is probably what KeyBank actually sees as well, actually upgrading the stock and increasing the price target to $24. A couple of things they noted, and I think this is a very poignant here for Lyft, is they actually see operating expenses down, and going forward, they actually see some EBITDA margin improvement. And I think if you look at Lyft relative to Uber, they really need it. I mean, from the standpoint of the business itself, they're still losing money, at least on a trailing basis from an adjusted standpoint when it comes down to adjusted losses per share. But on a forward basis, they are expected, at least in the next 4 quarters, to earn 41 cents. Ideally speaking, that's a better improvement than last year, as both of these platforms or ride-sharing based companies have actually increased prices. But I think the scalability issue that Lyft has faced is that they don't necessarily have additional revenues or marginal revenues that they can tack onto with the rideshare. Now Uber Eats has that component of their business. Lyft doesn't have that component to add additional revenues to take advantage of those transportation costs, which are embedded in the driver's business model. So I think the analyst actually sees maybe the worst is over for Lyft, based upon the fact that the company actually lost about $1.2 billion last year. Now that's pretty significant relative to $4 billion in sales, but the company does have about $1.7 billion in cash on the books, and they have been cutting expenses because one of the problems is their non-ride or non, if you will, driver-based employee revenues. They actually lost about $250,000 per employee. So cutting back some employees, I think, would be helpful for Lyft. We know that Uber has done that. I think this is what we're going to see continuing going forward, at least in the technology space. But overall, the business itself is improving from a sales standpoint, still in the double digits range, but they need to do something to cut expenses. And I think overall, KeyBank analyst sees that occurring at the very least in the next year or so.
George, a lot of the kind of optimism
Nice
for
looking
this
bull flag,
particular
though.
space is removing the driver altogether. We know that's a long ways away. How long remains to be the question. But if I'm an investor, I believe in the long-term path of where these companies and this business model could go. Why would investors choose Lyft over Uber? I know I'm not saying that, are they favorable investments or not, but if it's sort of consensus that Uber's more successful right now, it's got bigger scale, it's in a better capital position, is the upside for a Lyft investment, because it's maybe trading at a worse valuation or a lower valuation, that you have more upside if it can figure it out?
That's the whole point, Alex. You spot on. I think if you just consider Lyft relative to Uber, it's certainly a smaller company. It's only about 1/10 the size, but effectively they're operating a duopoly when it comes down to rideshare business. So therefore, margins, if they cut expenses, because pricing power is intact for both businesses, Lyft has the better gearing effect. In other words, because it's trading at a higher multiple, because the fact that its operating cash flow is still negative, it has better improvement metrics. And that's why essentially you can see, I'm not saying it's going to happen, better price.
All right, consolidating over the breakout. We'll see.
Company in a competitive landscape. And that's the premise behind, I think, what KeyBank
GNS
analysts
down
are saying
12.
here. They're saying looking at
Bouncing
Uber,
on the support
it
here.
may be fully priced based upon its earnings
Got a lot of
profile, but
retracing to
may be
do.
underpriced based upon its improving earnings profile. And that's the difference between the price performance of two different stocks that are trading at two different
We should
valuations.
short the shares on this thing.
Eventually they'll converge, but one of the things that happens, will have to happen, is we'll have to see some incremental cost cutting by Lyft, but also some incremental revenue. So if they do something to add, for instance, maybe last mile delivery options with other partnerships, with Instacart and so forth, that would be a huge boom to the business, or essentially other food delivery aspects to their business. Now they're going to have to spend to do that, but again, that might be accretive in the long run for the business itself.
George, really quick before we let you go, I have a question regarding some of these EBITDA forecasts that this analyst laid out. I mean, something you just said, and really at the end of the day, when looking at trading or investing these names more so, is improving EBITDA the same thing as strong EBITDA? I mean, I feel like this company does have a lot of improvement laid out that this analyst mentioned, but is that the same thing as a company that's solid on all cylinders? I feel like not at all.
Well, here's the thing. Yeah, it's a really, really good question. If you actually look at the EBITDA margins, they're negative. So if they actually show improving EBITDA growth, in other words, it becomes less negative, that's accretive to the share price. But you also have to outweigh or counteract the aspects of dilution effects as they get closer to profitability, because they will take advantage of better EBITDA conditions and better price conditions of their stock to issue more shares to offset the fact that they're still losing money, but things are improving. And that's where you'll actually see the stock price move higher. It's not when they become profitable, it's when they get closer to profitability. That's what you have to be looking for when looking for recovery in a stock.
Yeah, George, really good point. I do feel like this road to profitability has been a long one, but perhaps according to this analyst and according to some of the things you said, we're getting a little bit closer, moving in the right direction. But we'll leave it there. Appreciate all of your insight, George, as always, senior markets correspondent for the network. And that also does it for Alex and myself for this Tuesday. Coming up next, we have the watch list with Nicole Petalides.
Let's walk through how to analyze a company's financials on thinkorswim. To get started, go to the Analyze tab and select Fundamentals. Enter a symbol, then select Enter. To download detailed analyst reports, select Download. By the Numbers provides balance sheet information and other fundamental data. Company Details provides summary takeaways on key metrics and what drives the stock. Takes a more numeric look at similar information. If you find any of the information particularly helpful, you can print it out or take a screenshot. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
We empower those who act. Those who see the correlation between upswings and downswings.
Yeah, GME's volume is off. So maybe it's exciting, maybe it means something's about to go crazy. SPY is above its high. Yeah. I hope you're right. Don't you put that evil on me. BBBY. I mean, kind of breaking the support there intraday. See what happens at that pre-market high. SPY is very mellow after breaking that resistance. Not loving it up above 400, it would appear. Yep, and there she goes. Big flush. That's a pretty good move on the SPY. Going the other way. This is why my notes say false breakouts are common. Wait for it to continue. Yep, they follow SPY. If it goes to 25 today, yeah, I could just make a move to 25. I feel like it'll, if it moves today and we pick up volume, and it's not just gonna go to 25 though. It'll be more like 30, or maybe, yeah, maybe 25. I guess that's pretty far up still. Yeah, 25 is probably a more realistic target for a close if we do get our confirmation of a bullish move. Everything does look really bad right now. Really, really bad. Cosm's holding up nice.
Off of every dollar that advertisers spend through its online ad tools. So the Department of Justice in these 8 states are pushing really hard to make sure that this does not happen.
Give me the
They
5
want this
has been
business
set by
to break
decree.
up. Reuters reported that Google did respond, saying that the
All business little
lawsuit
conversion.
doubles down on a flawed argument
Oh, these things.
that would slow
This one's had a pretty negative
raise
beta the last
advertising
few
fees,
days.
and make it harder
I've
for
noticed that
thousands
too.
of small businesses and publishers to grow. That was a direct quote from Google.
They might just be
All right, interesting and a
sucking the
developing
market.
story, no doubt. And then we'll turn our attention over to earnings news. It's certainly a big week
I
for
don't think
earnings,
so.
and 3M is a key name down
Trip more
after
than
the
AMC
quarterly
did.
report.
Right. Those shares have been falling since
Not
the
if you're
pre-market,
short.
and
The
the
market's
quarterly
not- I mean, it's
report
pretty flat
was
today. It's
worse
not
than
like it's
expected.
red.
Sales slid, and the company projected in 2023 that sales would
You
continue
getting AMC
to
calls?
slide. Adjusted earnings per share came in
Dang,
at
dude.
$2.28. Below the estimate of $2.34. Revenue did beat expectations. It was $8.1 billion versus the $8.04 billion expectation. And then looking ahead, the company expects adjusted total sales to be within the range of negative 6% to down 2%. The consensus was for down 2.2%. And they expect an adjusted earnings per share of between $8.50 to $9 versus the consensus of $10.20. And on a whole, 3M CEO Mike Roman says that he's expecting more macroeconomic challenges to continue into this year.
I like that.
All right, Renita Young, big stories there. Thank
Yep.
you for both
Good
of
to
those.
trade both
Appreciate
ways.
a new 52-week low for
No problem.
3M today as well. Thank you, Renita. Thanks.
No problem with
Now, let's
that.
look at the bigger picture. Anthony Siccaro's with us, president of Providence Financial and Insurance Services, also the author of More Life Than Money, How Not to Outlive Your Savings, coming out on February 7th on Amazon and Barnes & Noble. Congratulations to you on that book. It's great to see you. How are you feeling overall when you see 2023 here? What are you telling folks?
You know, there's a lot of conflicting information out there, right? We've got inflation that's still high, although it's starting to soften, which is good news. We've got unemployment numbers that are coming down, which is the opposite of what you want to see happen. So the market has been fairly resilient so far in 2023. I think that the worst is yet to come, though. I think the Federal Reserve is holding off a little bit. All the consensus is that they're going to raise by 25 bips in this next meeting next week, which I think is what they should do. Slow down a little bit, take the foot off the gas, let the inflation numbers kind of catch up. That's a lagging indicator. But I think that ultimately as the unemployment numbers start to grow, which they have to, it could cause a shock to the stock market. And I think 23, if you're going to back me in the corner, is probably going to be a worse year than it is going to be a better year. I think we got a lot of rough waters ahead.
Tell me more. Explain what that means.
Yeah, so the bottom line is that inflation has to come down. But in order for inflation to come down, the unemployment numbers have to go up. And right now, unemployment's at 3.5%. The last couple of months, it's ticked down a little bit. But
Never
there's
fall
a
in love
lot
with
of
your stock.
professionals that are thinking it has to get in the 4 to 6% range. I think it's got to be above 5%, that unemployment number.
Some definitely
So
did.
when you get an unemployment that's in
true.
the 5 to 6% range, those people are not going to have jobs.
That's conflicting
All-time
information.
savings are coming down now. Credit card spending are going up at this point. And
I
so
think
when you
a
add
lot fell in love with a
unemployment
short
rate,
squeeze.
there's going to be a shock to the system where all of a sudden the market wakes up one day and says, "Oh my God,
But
we
yeah,
got a lot of people unemployed.
don't marry your stock.
And we have no more savings anymore. Credit cards through the roof. We can't
We're way
handle
past
this."
that.
Oh, by the way, with all these
I
unemployed
know,
people
explain what
for
that means.
profit,
That question
the
was
revenues are
up.
going to be coming down, so earnings reports are going to be
She had no response to
weak.
what he
And I
said.
think all of that hitting at
Explain
one
it.
time could cause a financial shock, and we could have some major problems ahead later this year or
Love,
maybe even
love,
next
love.
year. And of course, the recession is on.
Yeah, so it's like it's going to get worse before it gets better. That being said, what's your advice to folks so they don't run out of money?
So I think what you need to do is certainly depends on the phase of life you're in. If you're heading towards retirement, you keep doing what you're doing. Stay invested in stocks or your growth-based mutual funds or even your value-based mutual funds. If you're in retirement, it may not be a bad time to shore up your portfolio and focus on income. Income is the one thing you can count on, and that's regardless of whether you're saving for retirement or whether you're in the retirement phase. Focus on dividends. I think the next decade, which a number of professionals have said is going to be flat in the market, maybe even slightly negative, I think it could be known as the decade of the dividends because that is what you can count on. Your income in your portfolio is what you can count on. You can't count on your share price, but you can count on the income if you have an income diversified portfolio.
I see. So when you look at how we can generate some revenue and make a little money, how do you recommend people do that?
Dividends.
So there's a number of ways. First of all, most advisors, I think, are mostly accumulation type strategists. So if you're going to be looking at mutual funds, you're going to have a hard time getting a higher net yield on mutual funds because of the internal fees and so on. But there's a whole universe of options out there, including things like REITs and preferred stocks and BDCs, and for older people, maybe even annuities that could offer you 4 or 5% with hardly any risk. There's a lot of options out there that will allow you to get interest and dividends from your portfolio while protecting your shares. And it's all about the shares. The share price is going to fluctuate. But as long as your interest and dividends is the same, then you've got something to reinvest. You don't need to spend them. And if you do need to spend them, then that's fine because interest and dividends are renewable resources. You can spend them and count on them again next year as long as you've got a quality, diversified portfolio. So spend the interest and dividends. Don't sell shares to get your income if you're a little bit older.
I see. And when you were putting the book together, was it easy to sort of narrow down the topic?
You know, I had to limit it to the topics I felt were the most
Am I from?
important. I've been a financial advisor specializing in
that's a hard question for me. I moved around a lot.
23 years, and I've learned that it's
This
not
isn't
what
me
you
on
know
the
that's
screen.
going to hurt you. It's what you don't know that's going to wreck your retirement. And in the book, there are 10 different chapters about things you don't know that can absolutely wreck your retirement. And that's why I put the book together. I'm an educator at heart. I just want to make sure that my clients don't run out of money before they run out of life. And the challenge is I think there's a whole wave of baby boomers that are going to get out into their 80s that have been cannibalizing their principal and manufacturing income and don't realize it, and their portfolios are going to be cut. The next 10 years is not going to look like the last 10 years. The last 10 years, people have gotten away with it. The next 10 years,
Yeah,
they may
that's
not be
good
so
advice.
lucky.
It's a zero-sum game.
Well, I mean, we
Always
really
new
were in the
investors,
midst of a
always
bull
new
market.
traders.
I mean, there were some people who thought it was a secular bull market, and we were just sort of taking a pause.
Don't you have bro hair?
Absolutely, and that's,
I don't know what bro hair is.
That's what
Oh, are
Wall
you playing the
Street really
guessing game,
wants
Wayne?
you to believe is
Guessing
that
where
it's
I'm
just going to
from?
go on forever. And that's what
Oh,
we
that
want
is?
to believe
Is that a
too,
guess?
right? I don't want to believe that there's going to be a negative bear market, but history tells us that there are good periods followed by bad periods. And when I say period, I'm talking 10 or 15 years. There are good 10, 15-year periods where the market goes up double digits, and then there are bad 10 or 15-year periods where the market is just
I am not
flat.
participating
And when
in
I
this
say
game.
flat, I don't mean like flat line. I mean ups and downs and bears
I've never
and
lived in
bulls
Canada,
that are
though,
more
no.
cyclical, but wash each other out. So at the end of 15 or even 20 years, there's just no growth in the market.
visited.
This is the way history has been for over 200 years of Wall Street, so we should expect it. And when you look at the fact that the first 13 years of this century was flat, and then the last 13 years it's been double digits, it's no doubt that history is telling us clearly that the next 10 or 15 years is probably going to be more on the flat side. It just follows the trends of history.
Yeah, Anthony Sicaro, great to see you.
pretty grim,
Thank
man.
you so much. Providence Financial and Insurance Services.
I'm gonna
and
stave
offers
off that
more
flat. I want
life
growth.
Than money, how not to outlive your savings. Thanks. Still to come right here on the watch list, we'll discuss the outlook for Tesla with the team from ARK Invest. What could autonomous driving really mean for the stock's price? Plus, we'll discuss why companies need to evolve.
Rotation and value. Yep. Value's rallied so much so. A little late on a lot of value. Growth has gotten so cheap now. Yeah, selling premium. It's true, but the IVs come down when it gets flat. Yeah, I don't really care, honestly. We're down. That's true. Little late. I mean, I think the cycles are moving quicker now. The cycle from value to growth and growth to value, and so the rally up in growth that we've seen the last, what, I don't know, hasn't even been that long, a couple weeks. It might last a couple more weeks, but then probably, I think new lows are in for sure, coming for growth in the market in general. So the next downturn, if we do make a new leg lower, maybe value will come with it. A wine trip to Okanagan Valley. Today, this farm, this GME farm, should have been farming. Market's so choppy today. Tight, range bound. Where's the move tomorrow? That's true. Yeah, over a long period, it's just in a range. Valid. Verb, 10 times volume. Price not moved a penny. Maybe Don can explain it. Yeah. Just sold off, man. It's moved. Moved from 21 cents to 19 cents. Massive sell-off. Fifth of 1 minute. It is crazy, yeah. I can see that. I mean, just the whole... I know trading futures is crazy right now because of huge volatility. Prior to this bear market, though, just this melt up, I mean, it was aggressive, but still, the intraday moves weren't nearly what we're having now that we're in this bear market. But you say back in my day, I'm assuming you're talking like pre-2008. These days, maybe. Oh, it's 2019. Double SPY action. Here from start, still holding.
If we have a $2.50 deep range that we've broken, potentially we could add that 250 to this level at 7.5, which could give shorter term traders a target in the neighborhood of $10 a share. It also coincides with prior resistance, formerly support as well. So things do shape up quite nicely in the intermediate term, but there is a gap ledge that you want to keep an eye on here.
2012.
Right around $8. We fell through that area pretty aggressively back in June, late June, and that
I'm not in Mullen. I know some in our Discord are in Mullen.
Just a little bit of resistance in the near term. So I would keep an eye on that. And if bulls are looking to get a little more aggressive, closes through $8 would be opportunistic for them. What you don't want to see if you're a bull, and what you do want to see, of course, if you're a bear, is
I don't know, John. I'm
below that level at 7.5.
Of course, it could move tomorrow. I was hopeful for today, though.
Below the 200.
If we don't get a move today, I'm going to be cutting a lot of exposure.
Pretty well if the entire
as far as
space
options
were
go.
To take that kind of a hit. I would be aware
Probably
of
some
that as it
shares, but I'm
relates
not
to
sure yet.
The entire industry in semiconductors, because again, we've seen
Shares
a
don't
nice
matter as
big
much
push here in a lot
we don't
of
rally
these
up big
stocks
today.
off of the October
Doesn't mean we're just going to sell off. We could just kind of consolidate. But I think it really is waiting on the market. It seems like to some extent, for some reason.
Watch out for the gap ledge.
True.
So,
if it's that reliant on the market, then it's not going to be a big move.
That's what we have to watch.
To the upside, most likely,
That's
just
why you're on doing these
somewhat
charts for
subdued.
us. And then we turn your attention over to Teradyne. What stands out to you on that one?
Another one that's made a fantastic move. This one's up 50%.
There you go, a couple
off the
Mullen
October
people.
Lows. Of course, we love big short-term moves like this, but I think what you're getting is a
cheap how it
wonderful
happened.
opportunity if you're a new bull here or a new investor in the last 3 months. An opportunity.
All right,
to
let's
pat
look
yourself
at
on the
these
back
AMC
for a
options that will make
well-made
us rich.
Trade. You've seen us run to 104, 105. We took
We'll use
a
our little
pause
historical
and breather there
volatility.
yesterday, and today's action hasn't given a whole lot.
52-week
back. So
historical
it looks as though
volatility.
Bulls would
You see
still
this?
be in charge here on this chart. That said, the resistance is substantial at 105, and it
See what
might
that says?
take a couple of efforts. This
62%
is the second time we've gotten there.
as a low,
We probably need
225% as a
another
high.
effort to bust through.
See what the
question
IP is right
becomes
now?
whether we maybe retreat to what's been working,
125% at the money.
since October, or maybe we hold in somewhere better than that. Maybe the
12%.
200-day.
It's nowhere near its
or even the
52-week
50. We may not even
low.
have to get back down to those levels to entice bulls to come back in here. But
Maybe closer
again,
to the low than the
spacing,
high,
You know, the industry
but
of
just
semiconductors
barely.
has
It's
moved
pretty close to
so
the middle.
aggressively. It has me just a little uneasy on the long side for new positioning here. I like the idea for new positions or positions in the last few months to consider some profit taking as you run into resistance. That's a very good process to consider in the midst of a downtrend that we've been experiencing. Smart when you're trading counter trend to try and be a quick exiter on the long side for profits when given the chance. So I think it makes a lot of sense to be looking for those opportunities here.
I see. Okay. And then I do, while I have you, I'd love to ask you about the major market averages. I know you're watching the S&P, and a lot of folks happy that we're back above 4,000, but the levels that you're really watching are a little bit different.
A little bit, not a whole lot, but you'll notice if we look at the S&P, we've got that downtrend line, which is so obvious. And you know, one of the things that keeps me a little on edge here is the fact that when everyone in the market sees the same thing, rarely does it play out the way that everybody expects. And I know there's a lot of us anticipating a rejection once more at this level. The opportunity exists if we can trade through yesterday's high, somewhere in the neighborhood of 4,035 on the SPX. We could get a real short-term pop up to 4,100, and that's a good area for another decision point. Do we bust through 4,100? Do we make that new short-term higher high? Those are the kind of things that are going to start to, flip the bears that are out there still to becoming more bullish in nature. It might be necessary for the market to actually break this downtrend line in order for it to actually reverse. So I would give anyone who's watching this trend line just a little bit of a pause and think about it for a couple of days, regardless of what happens here. If we bust through this trend line and we start to move a little bit higher, that would be great. And yet I'm still going to encourage an approach that says, give it a little bit of time. Look for 2 to 3 days over that trend line to really validate a breakout. I think we could see a break higher above the line and still get rejected in the short run here. We have that FOMC meeting on deck next week. That certainly presents as a catalyst opportunity.
Okay, that's good to know. A good point. Thank you for that. Kevin Horner, wonderful to see you. Technical Tuesdays. Always glad you're on with us to take a look at everything. Appreciate it. Kevin Horner of Charles Schwab. Coming up next, we will talk Tesla. A team from ARK Invest joins us. Our demand issues behind the EV giant.
Mullen has a fighting squad against naked short sellers. They're getting on too. We haven't really seen a move from Mullen from that news. Oh, that petition thing. I did see that. Okay. That's not the same. It's not from the company. That's... Yeah, that was a petition to get him to do something. It doesn't mean he's going to. But yeah, so there's potential for a big move on Mullen then. If he does go through with that, I think the news on that would be big. So that might be pretty good. You're so bullish on Mullen. I'm not really bullish on any new car manufacturers. How many new car manufacturers come out in the last 20 years? Successful.
going to become much more of a recurring revenue business model as opposed to one-off car sales. It's going to turn these cars into, highly cash flow producing assets for Tesla, and I think that'll be super interesting. We think that could be over 60% of the company's value by 2026.
Yeah, and have that recurring revenue. What's interesting is when you and I spoke years ago and you were talking about all of this, I mean, people would have made a lot of money if they were listening to your reasoning behind the moves that could move this stock higher. And we really did see it move higher, so much so, you mentioned the stock split, and then we saw that. So with that, where does it stand? If it's not really a demand issue, is it still a leader? I mean, there's been arguments that it's no longer a leader, and now the group is so diluted with so many different kind of cars. I mean, is Tesla still the behemoth?
Yeah, so my colleague Sam Corris has done a lot of great research on electric vehicles, and ultimately, if you look at a price for the range and performance that you're getting from the vehicle, Tesla is a leader, by far. We think they're actually still years ahead of competitors. I think China is sort of its own story, and there's some let's say like lower cost mini electric vehicles that on a volume basis are really taking off there. But when you look at the segments that Tesla competes in, they still have great market share globally. I believe it's over 20% still this year. So, we expect them to maintain that lead. And honestly, these price cuts that have recently happened are really just going to put a lot of pressure on the rest of automakers. I mean, I'd be scared if I was producing EVs, maybe at a loss, and I saw Tesla cut their prices by 20%, and you can't really cut prices on gas-powered cars either, right? Because this is the legacy technology platform. So this is something that's just going to allow EVs to take even more share and really cement Tesla's position.
And, and to your point, I mean, by cutting the prices, they've already seen more demand from what I understand. Of course, they'll have the opportunity to have those tax write-offs. And, there are some people who think Elon Musk was a genius in doing exactly this, just to drive that demand in that way. Tell me again the prices so people can write it down and think about it and talk about it later. Your bull case, your bear case in the years ahead for Tesla.
Yeah, well, I would really focus on that expected value of around, $1,500 per share all in by 2026. But one interesting cut that I would take on it is, autonomous driving. While we think, this is the most important technology, on top of the core EV business that Tesla should be focusing on here, and it can be massively value accretive. If you take that out, so in other words, if you don't believe me, if you think that Tesla won't launch an autonomous ride-hail platform, in fact, they won't launch any form of ride-hail over the next 4 or 5 years, that $1,500 per share would actually become $500. So that's really just the electric vehicle opportunity alone. So, looking at today's stock price, again, this is still, a multiple of what it is today. So we think that's one thing to focus on now, as again, we think that a lot of these demand fears, reaction to the price cuts are a little overblown. So I think it'll be good to hear on the earnings call tomorrow, sort of management's take on that, and of course any additional updates on full self-driving.
Yeah, and that's the whole thing. I mean, as you said, even if they didn't have all of this, just being the EV maker that they are, you're seeing $500 when it's at $143 today. So you still see the upside potential. And, when people think of Tesla, they don't just think of it as an EV maker. They think of it as a battery maker. They think of it as autonomous driving, self-driving, the semi-truck. I mean, that's something you're looking forward to hear more about as well, right?
Exactly. Actually, we've done some work on autonomous electric trucks, and with the cost per mile savings that you get on an autonomous electric platform, which we think will get a slightly better utilization rate than today's human-driven diesel trucks, at scale, these could actually undercut the price of rail to transport goods. So that'll be really dramatic. We already see a lot of demand for trucking. Of course, there's already a driver shortage. E-commerce is really just going to accelerate the need for better logistics solutions. And I think, autonomy combined with electric platforms will really just push those dynamics over the edge. So yeah, that was a super exciting unveil for us. We're continuing to watch that space. Actually, our new Big Ideas report which should be published soon here in the next couple of weeks. We'll include a lot of our latest research there as well.
That is exciting, and I look forward to seeing more about that research. I mean, when we talk about deliveries and production, the fact that Tesla had so many shops, manufacturing plants around the world, they actually made it. By doing so, it actually made it easier for them when we had COVID lockdowns, when we had supply chain issues. It turned out Tesla was better positioned than many of the other EV makers or automakers at that. What's the final takeaway in the world of EV? I mean, I know the adoption is real. I don't know the rate of adoption, but it certainly is a big deal. Or maybe people are making mistakes because there's so many EV makers that came out with all these big plans only to have them fail pretty quickly. And as you said, in some cases, some would say Tesla's light years ahead, by the way they're producing and making this happen. Sometimes we have the wool over our eyes in some of the newer names.
Yeah, I think so. For electric vehicles in general, ARC's forecast is that they could go from a little less than 8 million last year in sales to about 60 million by 2027. And, that actually could be conservative. I think the real thing to watch out for is how much will traditional auto sales decline. We're of the view that global auto sales likely could have peaked in 2017. And as we see, especially autonomy take hold here, these personally owned cars, which really are stranded assets, they are used for less than 5% of the day. We think that more people will transition to using in urban markets autonomous ride-hail solutions, and that along with electric vehicles, we think the total number of autos out there, again, we likely have seen the best days in terms of total sales in 2017. So electric vehicles actually could be a pretty meaningful portion of overall auto sales, is what I'm getting at in 2027.
Yeah, I mean, it'll be pretty incredible to live in an urban market and have autonomous ride-hail, and it'll feel like we're straight out of the Jetsons at that point. Tasha, it's wonderful to chat with you. I'm glad you're able to join us on the show. We haven't had the chance to speak in a long time, and I really like your insight and look forward to more of the research. And of course, we'll have big news from Tesla this week, so thank you for all of that. Tasha Keeney, ARK Invest, thank you.
Thanks.
Coming up next, we'll talk about businesses and their needs to evolve. Why do some companies struggle with change? Why is experience disruption becoming one of the fastest growth segments in the market? We'll explain that. And right now, as we head to break, take a look at some of the winners and losers in the S&P 500.
Talking a little retail when they get back. Okay. I've been here. I've just been quiet, pondering over this stock market. More just GME and SPY melting back up the highs here. Just chopping both directions. Yeah, I don't think the GNS play is over. I think the hype for it will probably die down until they announce the dividend or something along those lines. And then maybe we'll see a forced closing of shorts, which will cause another big move, maybe a lot bigger even. But it could come down before then, I would imagine. Yeah, trading squeezes, that's true. It is definitely relying on your ability to time the market, which is very tough. The IAF consolidating up at this high. Look at that bull flag. Might be a nice entry on here. Probably gonna have a share offering though. Right. I don't know. Might not do its thing today. We've seen it do its thing in the last 30 minutes before, though. I think that was with the quad witching, but... Yeah, GME just shut off today. Yeah, today is more how I was expecting Monday to go. So the way Monday had that melt up gave me some more reservation for today. But it's not over.
What is it going to take, Nicole? Because we recently saw 10-year yields take out the December lows, but
tomorrow,
if you look at the SPX, the D's high is around 4,100, so we're ways away from that.
I'm reducing a lot of exposure today if we don't rally.
Around 12,166. I want to point out at 4,018, we're well off that January low, December low, which coincides or hangs out right around that 3,800 level. So quite the move to the upside here, but still, again, relatively contained. And when you look for that next catalyst to get us through that December high or to that December high, I guess is the first hurdle ultimately. I think one has to point to some of the names you've been looking at on the show here in terms of companies reporting quarterly results, and then we'll also be looking to the Fed next week, the jobs report as well in the coming weeks. So, but I think earnings is going to be a big part here over the next couple days.
All right, absolutely. I think you're right on with that. What about what we're seeing in some of these commodities? When we see crude, still see oil above $80 a barrel, but nat gas, for example, had been bouncing around the lows of June of 2021. What are you watching when it comes to crude and nat gas?
Yeah, natural gas really took it on the chin, to say the least, right off highs that we saw earlier last year, up around 10, back down to around $3 this week. And I've also been watching crude oil today coming off back down below $80, but I was just mentioning the indices relatively contained in terms of some of the price activity we're seeing this month relative to last month, and a similar pattern playing out in terms of the WTI crude oil. I'm noticing that we had a high last month, December, up around 83, the low we saw, which was down around 70, so we're hanging out kind of in the middle of that range for the most part, and chop, and you know, a lot of focus here on, well, should we get above 83, a double top that we formed in November and October of last year up around 93, a lot of focus obviously on China and the demand or lack thereof in terms of that reopening trade. But you know, I've been watching prices at the pump, Nicole, and they're on the rise here right now. Today at 344, up just 2 cents from yesterday, but 327 a week ago, 309 a month ago. I mean, I think you see the trend here. So ultimately, if this continues, crude hanging out around 80, I'll be curious to see how far prices at the pump go. Keep in mind the highs that we saw last June up around 5, so well off that, which does feed into that inflation easing narrative. But if they're starting to inch back up again here, that inflation easing is going to slowly start to not necessarily be the topic of conversation. We're going to be focused on, again, higher prices at the pump if this continues.
Right, understood. Ben, thank you for all of that. Really appreciate it. Ben Lichtenstein, thank you. Let's switch our focus right over to businesses and their need to change over time. They have to adapt to the new world. Alan Adamson's with us, co-founder of Metaforce and the author of Seeing the How. So it's really vital for these companies to evolve. In fact, we saw that during the pandemic. It became very evident. Tell me a little bit, explain this to us.
Well, everyone always talks about keeping up with what's changing and, oh, we're right on the edge. But human nature is that if it ain't broke, don't fix it. Handicaps most companies. If things are going well, they just let it go. And only when things start to shake or the sky starts to fall do they start to think of how we're going to change. And the key lesson there is if you wait for that point, you'll never catch the wave. You'll never execute, because coming up with a good idea to take your business to the next level is 25% of it, but 75% of it is executing that well. And you need some time to get it wrong once and get it right and make it better. So most companies don't change until it's too late. And when they do change, they're already behind the 8 ball. So while it's easy to say, it's really hard to do.
Right. And in the retail landscape, you have a few examples for us, like Bed Bath & Beyond and Gap and GameStop. Explain to us what it is that you mean here. You have a theme that you see.
Well, the theme is that retail used to be about just putting a product on the shelf, and if you wanted it, you had to come and you had to get it. And of course, everyone knows in the last 10 years, if you want a product, you don't have to drive to a store park and go in and pick it up and put it in your trunk. You can double click and it just shows up. But many retailers, while they've added on some digital component, haven't been able to integrate both the digital and the physical, and they haven't taken their physical experience to the next level to make you want to go in there. So if you go into a store and all you can do is pick up the product that might be in stock or might not be in stock, and the person helping you really doesn't understand the difference. I took my daughter.
I like that little measuring cup. That was cool. You go to Bed Bath & Beyond and pick one up.
Everything up at Bed Bath & Beyond. And they were overrun. They didn't have the right people. They were out of stock. This was their big Broadway opening, the big back to school push. And they couldn't execute it, even though they've been in that business for a long time. Now, some of that was supply chain. Some of that was labor shortage. But ultimately, if the retailer can only put product on a shelf and not provide an experience, more like a luxury brand, where you can go in, ask questions, learn, figure out what's the best brand for you. If all they can do is say, here, read this, and decide if you want it, they're in trouble.
So in your new book, Seeing the How, what should we know for these companies that may be doing it right? What would be some examples?
Lots of companies are very focused on the product. Here's our store. We're going to make this display here. Here's our product. It works 10% faster than the other product. And if you have a completely product-focused approach, you'll never see an opportunity. Lots of growth today, and for the past couple of years, has happened because marketers and companies are looking at not what they make, but how it fits into someone's lives. How can I make people's lives easier? How can I change the experience? How can I help you order food from a restaurant from your phone? How can I find another place for you to sleep other than a hotel? So lots of innovation is happening, not so much by inventing new products as it was the case for many years, but by looking at what can we do to change the customer experience. And in Seeing the How, we look at a number of lenses that help marketers and businesses see opportunities to change how we do things. Most of us are creatures of habit. It takes time. The pandemic accelerated that change and forced us to buy more online, do more drop-off, pick-off, change our habits. It was a perfect time to accelerate this. Now we're out of the pandemic, and more marketers and brand builders and companies need to think, how can they make customers' lives easier? How can they provide better service? Not so much how can they make their product 5% faster.
And it's hard to sort of think out of the box like that. But to your point, when you say, and you provided some examples, you were saying, how do I order food from my phone? Oh, Grubhub. How do I sleep somewhere other than a hotel? Oh, Airbnb. I get what you're saying here. So what's the final takeaway for these companies that find it difficult to change because they may be left back in the dust? I guess they have to really know and understand technology. Is it getting a mixture of talent? Maybe have somebody older who has a lot of experience and somebody younger who may be more in tune with technology. I don't know. You tell me.
I think, Nicole, it's the number one thing is to get out. Most people go to the office, start answering emails, look at a screen, and read a research report. The best way to see what's coming is to get out from behind your desk, watch people. They'll never tell you they don't like waiting in line. They'll just, sit there and do it. But if you watch them, are great observers, and try to see a change coming further down the road and start figuring out how to execute it, because no matter how obvious it is, the person who wins is not the one who spots the idea, but the one that executes it great, and that takes time.
Yeah, we're getting we're getting to move up on these two now, SLGG and
You won't have the money, you
or
won't have the
EBET.
time. So the number one rule is, have a little bit of the Andy Grove, Tony the Paranoid survive, even if your business is great. Pretend it's not great. Try to figure out what you're going to do if it starts to get soft, so that when it gets soft, you will have already figured out how to evolve and move on to the next opportunity.
Right. And so it's not just having the knowledge or the ideas and being smart about the whole thing, but the tenacity and the consistency to do it on a regular basis and to execute. Alan, we understand. Thank you so much. It's wonderful to have you on the show. Thank you for explaining all of this, pushing us a little forward. We'll get out from behind our emails and open our eyes a little more. Alan Adamson, thank you. Co-founder of Metaforce and author of Seeing the How. Thank you. Still ahead, let's dive into those earnings from Johnson & Johnson. Whoa, that was a tough one with fourth quarter profit.
Kind of skirted over the BBBY GameStop chatter. And 10 minutes to power hour. Open to move at Hat Mall. We're on stream. Well, I've got these options to pick up in the morning. Not typically the time you want to buy them. Down 33% on them. Be dumping them before close. Unless if we get a move. If we get a move, I might even still dump them and reposition tomorrow, or might just hold them. But yeah, not super hopeful. These didn't decay terribly because they were 22s, close to the money. That's tremendously helpful. Now do we get a power hour rally or nothing, or drop?
But they still saw some, solid fourth quarter results, most would say. What do you think, Damien? What do you make of it?
Yeah, when we take a look at the Johnson & Johnson earnings, I think it's sort of consistent with what we've seen over the last several quarters, which is a very steady performance, really with strong performance with all segments. And I think that's probably what's going to continue on for the next several years. J&J has this portfolio of very diversified assets that is pretty well structured with innovation offsetting patent pressures and other competitive pressures. And I think that's what we saw in the quarter. Top line was up close to 5% operationally. And I think even though that top line might slow a little bit in the next couple of years, generally speaking, we'll probably continue to see sort of that steady growth that J&J has done over the last several years continue into the near future.
David, what do you think when you looked at the numbers? Obviously, we're past the J&J COVID shot. I mean, there's obviously that helped many of these drug makers along during COVID. So maybe we're getting over that hump of that particular driver. But it really is a bellwether for the group. What did we learn from this report?
I think what we're learning from the report is that they do have some patent pressures, as Damien referred to. They have 2 drugs that will see biosimilar or generic competition in 2023. And there's going to be erosion there. On the other hand, they have a good pipeline coming up, and they've had some drugs that are approved. There are drugs that are in registration for new approvals. These treat multiple myeloma. They have other oncology drugs. And then on the med device side, they just completed the acquisition of a Biomed, which will it's a heart recovery solution, and that should be it should help growth on the med tech side. The other big thing is that they're spinning out the consumer health segment, and there's some uncertainties about that. There's some costs with that, and people have to look at the company just with medical devices and pharmaceuticals, and no more Band-Aids and Listerine.
Right, understood. And that's something you also talked about in your note. Damien, you talked about the spinoff of the consumer group likely to happen later this year. Does that seem to be on track for you? And also, where do you see this company headed? I mean, you basically have fair value around the current price point here. And are there other names in the group that you think may be better buys, Damien?
Yeah, good question. So when we think about the divestment of the consumer health group, it's going to be called Kenvue, likely to happen later this year. And strategically, this does allow the 2 separate entities to really be more focused. And I think that's going to be helpful for each independent group going forward.
I want to break this high now.
And
after
I think
all
it's
day.
likely that we'll see some
Properly
potential
break it.
for valuation accretion on the consumer group. When you think about multiples in the consumer group, they tend to be a bit higher than what you see in the big pharma group. For example, a lot of the top tier consumer companies will trade at PE multiples, well above 20 times. And, when you think about your general big pharma PE multiple, it's closer to 15. And so there could be a little bit of value creation there as well. But strategically, I think it makes a lot of sense. Like was previously mentioned, there are going to be a little bit of extra costs, but all in all, I think it's probably the right strategic direction for the company. I am a little surprised they're doing this. They're one of the last companies to sort of break up this conglomerate structure that was so normal in the 1990s, but is fairly unique now, and J&J's finally moving towards that split. And then the last question was on valuation. Yeah, we think J&J is pretty close to fair value. I think it's a nice company to own. I don't see it really significantly over or undervalued. If you are looking for a more undervalued name, one of the names we really like right now is GlaxoSmithKline, GSK. This is a firm that has had some pressure on litigation that we think is overdone, and we think the underlying business there
Can I
is
actually
very
do
well
it?
positioned, and we think it's being
Aren't running Power Hour? What's
underappreciated
going
by the
on?
market.
Let's see it, Spy. What do you got?
Mentioning that one, David. What are your final thoughts here? Is GSK a name you like? Do you like it better than J&J at this point at these levels?
Well, I don't follow GSK, so I'm not going to comment on the rest of the pharma sector. But one company I do like, not necessarily more than J&J, but we talked about medical devices, and another company that I really like is Intuitive Surgical, robotic surgery. They're going to benefit from recovery in elective surgery volumes. So, we like Intuitive Surgical, and they have the industry-leading technology in robotics and soft tissue surgery. So, that's another name to look at.
Thank you guys for your support and your likes. 42 of them.
Thank you, ISRJ. Thank you both very much. A good look at these names in the healthcare biz. Really appreciate that you're both able to be on with us. David Tung and Damian Conover, thank you. And thank you, friends, for joining me here every single day, live at the New York Stock Exchange, 11 a.m.
Appreciate it,
and 2
guys.
p.m. Eastern, right here on the
Our hour starts in 3 minutes. 3 minutes. One minute. Eyes moving up. Like just a little move on GME to get out of these options. Just a little volatility to the upside. All right, there we are, power hour. We are climbing. GME is not. Bed Bath has double bottomed here. Market is reversing. If it closes up here, the RSI divergence will be off the table. Could still be bullish on the TA. If it comes down, I mean, it's going to be close either way, unless we get a huge move to the upside or a huge move to the downside. large at least. GME's move, I mean, it could still happen later this week. Still looks like a nice cup and handle. That divergence is probably going to stay there unless we close at the highs today. What's the volume on GME today? This is crazy. Crazy low volume. Thanks, Ace Ventura. Appreciate it, man. That is very kind and generous of you. Thank you for all your support. That's us getting on our scooter, cruising down the Rio Grande next to it. Well, BBY held up. It's held up pretty good today. Not terrible. GME has also really just hasn't done crazy stuff. Open the briefcase. Those are IOUs. That's as good as money. That's as good as cash. What did he say? Exactly. Hey, it's not easy being the most profitable hedge fund by like 3 times any other hedge funds in the bourse market we've had in 20-something years. Okay. Explain 60 million profit. What does it say? Yeah, I can't explain it. Not sure. This billion sold my purchase. It could be short positions or unrealized gains. You know, just how you have positions if you don't realize it. But I don't know, I'd have to look into it. Okay, I'll wait for the video. I'm gonna end the stream though, do a recap video showing positions and trades and Yeah. And my options and TA and my outlook on sure. Pretty boring day. Very boring, fortunately. Yeah, spike. I mean, kind of double topping here at the highs. It's had a long. I closed it. I thought about going short. I'm just gonna leave it. It's just been so choppy. Thank you guys, appreciate it. Thank you for your dono. Much love, man. And thank you guys for your subscriptions and your likes. You guys are legends. Hit 44 likes. I appreciate it. That's huge missing parts. Like new missing parts? Or they've been like that. Thanks, Dink. Okay, thanks guys, we'll see you on the video. Sub up, like up, comment down. Happy money sticks around. Our Discord has been pinned if you guys want to join there. It is free to join. And Twitter is Happy Money at YT. Also in the description. We'll see you on the recap video. Thanks guys.